All right, I've done a little housekeeping. Hello, everyone. Thank you for joining us. And I know that the sound is good. I'm pretty sure everyone can see my screen. Thanks for joining us for December 21st, Traders Exclusive Live Strategy Series. I'm Sherry, your hostess with the mostest. We invite 4 expert traders to speak at this free live event, and we do it a couple times a month. And I'll just pique your interest with 4 points that will be covered today. We're going to understand some of the recent changes in the options market that help you create a turnkey income system. We're going to understand the option strategy that can provide a 10-to-1 or higher positive risk to reward ratio. We're going to understand a safer approach to trading and investing, which increases confidence and allows for more substantial long-term rewards over time. And lastly, understand the importance of following your trade plan, including, at a minimum, a stop, a buy box, and a swing target area. So please check out tradersexclusive.com, where we regularly post articles and video clips with valuable trading tips and techniques. This is also where you're going to find today's recording of our webinar. Before we get started, you know the drill. I've got to share the quick disclaimer. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations presented here are subject to change at any time. Past performance is not necessarily indicative of future results. Please take some notes and write your questions down, but wait for the speaker to be done with their presentation to ask them. And now I want to introduce to you Doc Severson of 12-Minute Trading. Let me just come over here. He's going to talk to us about capturing consistent weekly profits with zero-day options. Doc Severson is that guy who quit a 6-figure income as a telecommunications product manager in order to trade for a living from his home office. And Doc has been mentoring other retail traders since 2005, helping them in their quest for independence. And he's recently teamed up with some old friends at 12-Minute Trading, where he's running the live daily Target 100 trading room. Welcome, Doc. Thanks so much for being with us.
Thank you very much, Sherry. It's a pleasure to be here.
Awesome. Well, we're looking forward to your discussion here today. I'm just going to go ahead and turn it over to you and mute myself, and you take it away.
Okay, so Sherry, I'm assuming that you can see my screen okay. Everybody
Yes,
out there? So, okay, terrific. Thank you very much, Sherry. And I'll bring you in on time and under budget here by 45 minutes after. All right, so today, again, my name's Doc Severson. We're going to be talking about capturing consistent weekly options or profits with weekly options. And this is kind of the way I like to do things. I like to give you guys a visual of where we are. So even though we're only talking for 45 minutes, a lot of people, I think the average human attention span is maybe 7 to 10 seconds or so. So I want to make sure that you keep on track here so you know where I am with relation to the end of today's presentation. So I've got about 2 hours of material that I'm going to fit in with the next 40 minutes. So pay attention. If you don't catch something, you can always ask questions at the very end, or you can watch the replay later on, which Sherry, I think, will provide you. So who am I? Who is Doc Severson? I'm an individual trader and performance coach, again, since 2005, current trading room moderator for the 12-Minute Trading Daily Target 100 service. The daily trades that we're taking, looking for 100% return for the year. You might have heard of me before, bouncing around through different services like Options Linebacker. That was my first, and then Options MD, Theo Trade, Doc's Trading Tools, and most recently ReadySet.Trade. My specialties are fractal price analysis. This means using multiple time frames, spotting patterns, options and future strategies, trading mindset as a necessity with trying to keep my own monkey brain in check, and then simplifying the complex. I'm a former engineer, and so what I'm always trying to do is to solve the problem and make things simpler. So to that end, I wrote a couple of books which are available on Amazon. First of all, Hacking the Holy Grail, which is about understanding how to become profitable and understanding that your mind itself can be your greatest asset and can be the holy grail, as well as fractal energy trading, again, on Amazon, which is about how to trade multiple time frames and use the concepts of fractals to do so. Okay, so that's who I am. What do I want to do today for you? I want to see today's small investor get started without being taken advantage of. I can't stand that. I want to see the small trader and the small retail trader learn to win. And some of the new option strategies and new options available that have been released this year offer one of the best natural edges that I've seen available to retail traders in a long time. So my purpose today is to kind of walk you through cradle to grave, the entire thing, show you some setups, and in general, help you decide if this is something for you. So this is going to be about 99.9% content. Pay attention to this. This is what we do on a daily basis. And more directly, I want to show you how to win more than 90% of your trades and make, for every dollar that we lose, we want to make $1.80 in profits. And that's the current number that we're doing. I want to show you how you can create these consistent results. Okay, so back to the screen, why we're here. What are we doing here? Everyone is trying to set themselves up for financial freedom, right? But using yesterday's methods just won't work anymore. Have you seen any of these in play? So the old paradigm of investing was build up and continue to grow your pile of assets and then live off of the interest. So once you accumulated enough of these assets, you could safely live off the interest without depleting your principal. And so the old standard was to build up $1 million and then live off of $50,000 a year in interest at 5% APR. But I don't know if you've been keeping up with current events, but we're just not making that. Somebody's making it, but not us, the retail investor. And earning 3% a year or 3.5% is just not going to cut it. And to some degree, I think we may see this start to slide back down again. So what are alternatives to interest income? Now, these are what you're going to receive from your typical managed money manager, right? Your typical fiduciary money manager is going to talk to you about annuities, and they're going to talk to you about bond yields, and they're going to talk to you about dividends. But all of these are kind of not so good anymore. The traditional methods of augmenting returns are terrible. Annuities lock you in for years to receive a small return. Bond yields are still, we're still below 4%. Stock dividends can be upwards of 7% a year, but you're going to pay for it because you're going to get a lousy chart to work off of, similar to this one. So this means that if you follow the old paradigm of growing your pile of assets, you can do that, but being able to make money on your money is no longer there and hasn't been for quite some time. So retirees are going to be shredding through their principal in no time and wondering what changed, even though this has been happening for the past 2 decades. So in the words of Private Hudson, what do we do now, man? Game over, right? Well, that's what a lot of people are saying, but it doesn't have to be like that. We can take income to the rescue. Income is what we once received through interest and dividends and bond yields. So how can we replace it? Well, we can replace it through passive income, which is earned without active participation. So this is previously like interest, receiving dividends. So are there things that we can do passively to earn income? And of course, there's always active income. This requires our participation and effort to receive it. So this is usually a job or active trading. Now, can we use stocks for this income? Can we create income by trading stocks alone? Well, stocks are still expensive even after the bear. We've had such a huge amount of asset inflation over the past 15 years that it's not really that viable anymore. It requires a massive amount of capital to trade market leaders. Day trading stocks requires too much capital for smaller accounts. And we've got that pattern day trader rule. It's very restrictive for smaller accounts. So I would say trading stocks to try to receive income is not a very efficient way to do this unless you're really, really good. To me, options are the answer. And I know you're not surprised. If you're at this webinar today, you're probably not surprised by this. So there's a couple of ways that we can receive this income using passive income. We can sell longer term options to act like an insurance company. where we're collecting the risk premium from option buyers. And then there's also active income. We can look for short-term opportunities to either buy or sell options using the leverage of options to more efficiently use that capital. So to me, options are a perfect vehicle for creating income. And now, if you haven't traded options before, I would disagree with that. Yes, you have used options already in your daily life. If you've ever used a coupon or bought an insurance policy, you've already traded calls and puts. So we use very simple combinations of options to earn income. Anybody can do this. So my assumption for today is that since this is a market taker or advanced webinar, I'm going to skip the usual background on options and get right to the strategies. So the question is, how do we generate active income using weekly options? Back to the bouncing ball here. So now we're going to be talking about earning a certain number of dollars per day. So what about $100 per day? Does that get you excited? Can you earn income like a paycheck? Earning $100 a day probably doesn't sound like much of a goal, especially with all the overblown promises by vendors in this space. You hear a lot of people saying, hey, in our trading room today, we made $5,000. Okay, how much did you risk to make that? Okay, is that going to work for the typical small retail trader? And that you might have made significantly more than $100 a day in your job, but you must start somewhere. This is where I want you guys to get on board with this. You've got to start somewhere. Even if it's $10 a day, it doesn't matter where you start, it's where you finish. So what I recommend that you do is to pick one thing. Start with a modest goal, continue to improve on it every single day. This is the key to success over time. And it's not just a different indicator nor a fancy strategy. It's being able to do the simple things and continue to refine on the simple things day after day. Now think about this. This is what I got from JamesClear.com, who's got a best-selling book on this. If I were to challenge you today and say, could you get 1% better at your strategy today? And I think most people would say, sure, I can get 1% better by tomorrow. Okay, well then go do that. And so the next day you come back and report in and you say, you know what, Doc, I definitely got 1% better at my strategy. I refined some things. I worked on my offense, worked on my defense. I'm definitely 1% better than I was yesterday. Okay, great. Do it again tomorrow. And again, and again. If you get 1% better every day, I think most people can handle getting 1% better from a day-to-day basis. If you do this every single day, you're actually going to be almost 38 times better at something by the end of the year. This is where people fail because they take a little detour, they lose a trade or two, and then they go, oh, well, this is no good. So I can't tell you how many times I see people invest into a strategy or a program. They take a couple of trades and they don't win those trades. And so there's this bright, shiny penny over here. Hey, look at this. We make all this money and you don't have to do anything. And so they go thundering over here to invest into this program. And they'll take a couple of trades over here and it doesn't work out for them. And so they'll do the same thing. They keep just sort of running around and chasing different bright, shiny pennies until eventually, maybe years later, they come back to where they started from, and then they understand what they've been doing. So earning something like $100 a day, this is where I want you to start. I want you to start by picking one thing and getting really good at it. And so we'll use an income pyramid for this. An income pyramid is just a different way to organize your capital. Like you're going to trade the most of your account with these big, slow, ugly strategies down here that just don't require a whole lot of attention. They use a lot of capital. They're not very efficient, but they're reliable and they don't risk a whole lot. And so as you go further up the pyramid, this is where you're using less and less capital. So this is where we're going to be talking about today, not necessarily futures, but the smaller end of the pyramid where we're using less capital and not taking a whole lot of risk by doing so. Now, your approach, everybody wants a formula for your approach. Tell me exactly what to do. How do I do this? Well, everybody's going to have a different amount of capital that they start with. Everybody has a different amount of time that you have to dedicate to what you're doing. and everybody's got a certain amount of knowledge that they're starting with. And then the combination of those creates this sort of Venn diagram that's in the middle. But what I'm telling you is that everybody's going to be different with this. The one thing I will say is most people blame their lack of results on, I don't have enough money. I don't have enough risk capital. Okay, well, that might be a limitation, but that doesn't really give me somebody that has small accounts, small capital, and not a whole lot of time, but is willing to take what time they have to work on their knowledge, because knowledge is something that never goes away and it's not limited. Capital is limited, time is limited, knowledge is not limited. So give me somebody any day that understands the leverage of knowledge, and they can use that to work whatever time they have available, even if it's only 12 minutes a day, and then working with whatever capital that they have, because that can always increase. And so once you learn how to trade something with a small account, you can always apply that with a larger account. A lot of people make the mistake of thinking that, well, I need a larger account to start with, and then they, how do you make $1 million? Start out with 2 million, right? So we don't want to be doing that. We want to start and be really efficient with our capital to begin with. So again, your approach is going to be a different combination of this than anybody else, but I'm here to tell you that capital and time are not necessarily your enemies. So it is easier with a larger account. Sure, we get to sit there and do the wheel strategy on Apple month after month after month and make passive income from this, but I'm assuming that that's not why we're here today. So the power of one thing is incredibly important. All you need to be successful as a retail trader is to master one thing. I recall when this concept hit me, because I was frustrated. I was one of those guys that went through a program that learned 42 different strategies, and I was all over the map. I was everywhere. I had probably 50 positions in my brokerage account, not really focusing on how to get out of them, more focusing on how to get into them. And so it was just so frustrating, because you know a lot of things, but it's not translating into profitability. And so what I did was literally sweep my desk off one day and said, all right, I'm just going to trade one option chain and one chart. That's it. And one strategy. One chain, one chart, one strategy. And that's where things began to turn around for me. And it was, I think, 6 months later after that, that I turned in my notice at my 3-letter acronym telecommunications company. Scared the hell out of my wife at the time, but maybe not the best thing to do in terms of timing with small children and a mortgage payment, but I had to do it. I hated what I was doing that badly. It was the draw of inspiration, and it was the push of desperation to get out of there. So narrowing your field of focus to one thing actually improves your odds. So what I'm here to do is to tell you about this: master one thing and then look to diversify later on. Don't do it backwards like all the other retail traders. And by the way, if you recognize this, this is a still picture from the movie City Slickers with the actor Jack Palance, who played Curly in there. So if you Google or just search on YouTube, Curly One Thing, you'll see a 3-minute clip which will put down the power of one thing for you, and it will make an impression. It made an impression on me 30 years ago, and it might make the same thing for you. So today's focus is on active income. We're going to be using weekly options. We're going to seek to make a specific income goal per day, and we can skip days to avoid pattern day trader issues if we are trading a small account. So let's get into what we call 0-day options. This is a fairly new thing. Now, we've had weekly options. These were like the biggest thing 15 years ago. Oh, you have weekly options. So we just used to have these ugly, monolithic monthly options that would come along, and we had to fit everything in within 30 days. And it was not so easy to find opportunities. Mostly you were trading positions that were 30 to 45 days out. But now we got into this with weekly options. We got every Friday, we have an expiration coming up on And you're going to find the larger stocks that are out there, like the Apples and Amazons and the IBMs and so forth. They're going to have these weekly options. Okay, terrific. However, we have daily options now with the SPX. So we got fully populated 5 days a week now. Now we have some weird holidays in here coming up. So we have, we're missing some Mondays in here, but we now have 5 days a week on the SPX. This is where we get the term 0-day options expiry. And we also have these on the NDX, so the NASDAQ 100 index, as well as the ES futures options. So these are 0-day on several different ones. And guess what? We also got these on the spiders recently. So the spiders, the Qs, and not the IWM yet. Now these are great because they expire today. And what's cool about this, if you think about this analogy here, say there's a roaring fire across the room from you. This is a roaring fire. Just imagine that for a minute. And you're holding an ice cube in your palm. Now there's going to be a certain amount of melt just from the latent heat of your hand from there. But as you approach this roaring fire on the other side of the room, the heat that's going to hit you is going to be change with a square of the distance that you get. So the closer that you get, it's exponential in terms of the amount of heat that ice cube receives and how quickly it will melt. And so this is why we have something that literally at the beginning of the day, the end of the day, all that extrinsic value disappears from that option. Now, these are very sharp instruments. This is not the place to learn your first option trade. So when I was a kid, I used to go to these things called batting cages, if anybody plays baseball anymore. And you could pick, all right, do I want a 40-mile-an-hour fastball or 60-mile-an-hour or 80-mile-an-hour fastball? Well, a lot of people today are in a big hurry to replace their income and they want results yesterday. So they step right into the 80-mile-an-hour batting cage. It's probably not the right thing to do. So what I'm telling you is don't run with scissors. Don't step in the 80-mile-an-hour batting cage. Learn how options move. Learn how the pricing works. Learn the Greeks on something a little slower. Extend the trade out at least over a few days. And we use 5 trading days for the ones that we do. So you can do these today, and these are really cool. But the ones that we do are 5 days. So it gives you a little bit more time and a little bit less gamma to work with. So let's talk about strategies for a minute. This is where everybody wants, when I would read trading books 20 years ago, I would skip right past all the mindset stuff and all the other squishy, topics that I thought were just kind of boring. And I would go straight into the strategies, just like an engineer should, right? So what I've learned, though, is over time is that strategies are really secondary to your own mindset. But anyway, that's a whole different topic for a different day. A neutral strategy has got a bunch of benefits. So if you're trading long directionally, which is what everybody's used to, if you're trading a long position, if it goes up, great. If it goes sideways, you lose. If it goes down, you lose. So what we're looking at here is about a 33% chance of winning on an outcome basis, since an asset trending sideways is going to give you opportunity cost. It's not good. We don't want something trading sideways if we're going long, such as buying a stock or going long a futures contract. Now, if you're a neutral options trader, again, let's say that we're putting on a neutral to bullish trade. If it goes up, great. If it goes sideways, great. Even if it goes down to some degree, that's okay. If it goes down a lot, yeah, that's bad. On an outcome basis, now we're at 67% chance of winning or more, since an asset trending sideways wins as a wasting asset due to time decay. So this was a revelation to me when I learned this 20 years ago. Like, wow, this is awesome. I can now learn to win more consistently. Now, there's a whole other picture behind risk management to that, which we'll get to in a minute. So to me, 67% is better than 33%. Learning to use probabilities to increase your winning rate is one of the most liberating principles in trading and one of the biggest advantages in using options. Now, if you trade long enough, you'll understand that win rate is not everything, but it is everything to the beginning retail trader. Because if you don't have a decent winning rate, you're going to give up. You're going to look to something else. You're going to quit, and you're going to, instead of getting 10 years of experience, you'll get 1 year of experience 10 times. So I understand this. So for those of you that are saying, hey, it doesn't matter, it's all about the expectancy and profit factor, you're absolutely right. But try telling that to a beginning option trader. 67% is better than 33% for those folks. So let's talk about strategies here. Here is the king of option selling strategies used by professionals, the short strangle, where we're basically selling. We're selling a put down here, we're selling a call up here, and this is a naked position with unlimited risk to the downside and to the upside as well too. Okay, so it's got some interesting, it's really fast, but the problem is the huge margin required due to the unlimited risk profile. There's lots of war stories out there from new traders getting blown out due to the unlimited risk curve. And there's even more stories, I think. Somehow it's always airline pilots that seem to be ganging together and trading this strategy, and they do it for years successfully, and then all of a sudden, boom. And there's also a firm that got blown out. They used to do this strategy on commodities, and I think it was optionsellers.com. I don't want to get their name wrong or anything, but all of a sudden they folded up shop. They had one trade that got away from them. And so if you're going to do this strategy, you have to do it as a professional. You have to seriously dedicate yourself to risk management. So a way to fix this is with the iron condor, because what we're doing is we're taking a short strangle and then we're capping the risk on both sides by using spreads. So much less margin requirement. Probability is increased by using a lower reward to risk. So this is what I call the high probability variant. This is one where we have, some really, like maybe less than 10 delta. So less than 10 delta wings, things like that on the puts and calls. And then we go to what I call a low probability condor, where we're maybe the wings are at like a 25 delta or so. And then what we find is the risk of the trade equals the potential reward of the trade. Risk reward. So we have a 50% outcome to start the trade with, but we can derive whatever we want to from it through some intelligent use of charting. So probabilities decreased using a higher reward to risk. And then we can take this one step further. We can collapse the iron condor into an iron butterfly, where we actually wedge together the short options right up here. Now, what's nice about this is that width is sacrificed with speed. So it's a very quick trade. So again, you don't need to learn 42 different fancy sounding option strategies. Just a handful of properly applied, correctly managed strategies will work to create consistent income, provided you manage them properly. So you're following an insurance company business model by taking risk. You're pulling risk out of the market. You're being paid for it by those that want to offload their risk. This is how we're going to earn that daily income. Now, I'm going to go through this quickly to make sure that we catch up and finish on time. There's a couple of different schools of thought on how to time entries. There is the random walk, implies that there's zero knowledge about forward price action. So forward price movement fits within log normal distribution of price. Now, that usually works for the Chicago folks. It seems like everybody in Chicago worked on the floor, traded in the pits, and if you go to the CBOE, you will not find one single price chart anywhere in the entire huge building. Nothing. That's all random walk. That's basically saying, hey, we don't know what's going to happen tomorrow. And these guys pretty much diss anything to do with technical analysis. But the problem is retail traders don't have the same access to price discovery, that those in the pit, that they could see and touch and even smell price discovery right in front of their face. So we've always had to use charting for price discovery. So sometimes we take it a little too far as retail traders, that we can project forward price movement based on past behavior, which I think is incorrect as well too. So these two schools of thought are religious extremes, neither side respecting the other. So in my mind, I think we use both of them. So what we're going to do is we're going to use random walk analysis using that expected move. We're going to find the one standard deviation distance, plus and minus. We're going to use option delta, and we're going to place positions outside of the expected move. So we can see this just on a thinkorswim option chain here. We can see what the expected move here is. That's the EM. We can see the delta. We can see the probability that that option expires out of the money. And we can just use the current price plus and minus the expected move to determine where that one standard deviation bell curve lies. So we have that 68.2% probability envelope. And so we can play outside of that. In this case, we can play something with a 95.92% chance of success with a smaller delta, in this case, actually less than 4. So we're stacking probabilities in our favor. And our goal, if we're going to use technical analysis, our goal is not to predict the future with TA. We're going to use it to augment the statistical analysis of random walk. It's to enter and exit when there's an absence of a linear trend. So to me, I don't believe in this overbought, oversold stuff that we've been forced down our throat for the past 50 years. I think in the influence of QE and dollar printing, markets move very differently. I think they move to range expansion, range contraction. Think about this. If you're going to climb a mountain, how are you going to move up that mountain? You're going to go as far as you possibly can, and you're going to be exhausted. You're going to check out at a base camp. And then after a couple of days of acclimating there, you're going to move on. You're going to get up to the next camp, camp 2, and then maybe camp 3 before you finally make a summit attempt. This is how they do it at Everest. That's how markets move as well too. Range expansion, range contraction. So we use what's called a chop index, choppiness index, to understand when we have high energy conditions, high degrees of potential energy, and it's very, very likely to squeeze out of this, make a big move out of this. And then conversely, what we do is we look for low energy conditions. This is where we have what's called an exhausted market. This is not oversold. This is not overbought. This is where it's exhausted. It's had a very linear move, and it's likely to exhaust. You can only run so far in a straight line before you're going to be holding your sides with a big stitch in your side, right? We, at least back in the days when we used to run. So this is the choppiness index helps me find this, as well as price action. So we're going to stack all these probabilities in our favor. So we're going to place positions outside of the probability envelopes. We're going to look for low probability conditions for a trend and do the best job that we can to stack these in our favor. Now let's talk about defense for a minute, because you can't really have, well, most retail traders have a great offense and they've got a lousy defense. So think about defense in terms of options as kicking off to the other team. It's the same thing. When you put on a short option trade, you're essentially kicking off to the market and saying, don't cross my goal line. So I've got a couple of terms here, static defense and active defense. A static defense is one that's set up ahead of time before the trade is entered. And active defense may be something that you play during the duration of the trade. So maybe it's an adjustment. The defense necessary for an iron condor might depend or will depend on the structure of the trade to begin with. So if we're going to use something like a low probability iron condor, I've already got my static defense set up from day one. I don't have to worry about it. I can sleep through a black swan and I don't care. I don't have to watch the futures at 2 o'clock in the morning because something's going on over in Europe. Whereas if I'm trading high probability trades, this is where I do have to be a lot more concerned about it, because the risk here is something that I never want to get anywhere near that level of risk. This is the black hole. Once you get the trade into, the price comes down to here, it's very, very difficult to recover from something like this. And you can have literally months of profits wiped away from one trade. So this is the traditional picking up nickels in front of the steamroller type of trade. So defensively, we can set static risk based on three different things. We can set it either through the structure, but also by the number of points. We can determine, hey, I want to stay in this trade as long as it stays below, say, like 4,200 or above 3,900. Or I can use static defense that depends on the delta of the short strike. So we can say, okay, we entered this at a delta of 4. Once the delta get us up to, say, like 15, then we want to adjust the trade or do something different with it, or maybe just exit that side. And then what a lot of people like to do is maybe they'll do something like 3x or 4x based on if I'm entering something for, say, like a 25-cent credit, if it actually gets up to 75 cents or $1 to buy it back, like 3x, 4x, like this, they will do that. So it depends on what your style is. You can pick several different forms of static defense. So understand that there's no perfect static defense. One that is too risk averse will suffer from early exits on trades that would have worked out fine. And ones that's too aggressive will allow holding really deep, but then you may have an expensive exit. So find one that works best for you, stick with it. An active defense is one that requires a lot more skill and judgment to employ. And so this is where you see the freight train bearing down on you with one of these freight train trends, and you're like, okay, what do I do? So you see it coming from a long way off. There's nothing that you feel you can do about it. So you focus on what you fear. This is what a lot of people do. They stick their head in the sand and they go, well, I hope it turns around. So this is where you need to be active with your defense. Understand what your thresholds are and apply the right hedge towards that. Now, one way that you can do this is just to get out of the way. And this is actually the simplest form, is just to shut it down. You know, the great thing about what we do is there's actually 252 trading days a year on a typical year. And if one of them doesn't work out, I don't really sweat it. I don't really get all upset about that. I just close it down. Just like, let it go. Let it go. Don't get anchored into that. Don't fall in love with your trades just because you don't want to give that credit back. So to me, the best hedge is one that's placed with a good reward to risk, and it's inexpensive. And there's a great saying that I forget who said this and where I heard this from, but it was play defense during times of peace and not war. So I can set up inexpensive vertical debit spreads out of the money, which have significant asymmetric reward to risk. So one last thought on defending a trade. Please do not do this. Do not use technical analysis to defend a trade. Hey, that trend line should hold, or hey, the stock's overbought, or it's oversold and it should reverse. Don't do that. That big mistake. Okay, so let's talk about the system. I'm going to go through this really quickly here because I just have a few minutes left. And I told Sherry I'd come in on time. So this is the system that we use in the daily target 100 weekly income system. We're going to use SPX options. We're going to go 5 trading days out. We're going to pick a spread width, either 10 wide or 25 wide, depending on the size of your account. We're going to look for a relatively modest credit. We're looking for 2% per day, 2% returns on risk per trade. Immediately, we set up the exit for these. Avoid entry the day before big economic announcements or other known event risks like the Fed, like the CPI report, like Friday's PCE report. There's a bunch of landmines that are out there in today's market. It pays to know which ones move the market. So avoid entry or go with lower risk entries on days where the market energy shows high probability of moving. We want to avoid the freight train moves. Use static risk management and use one of the 3 methods that I talked about to close the trade out. Preferably, we're closing them out at the limit order. If price is in a longer term downtrend, we can see counter trend rallies to hedge the position, or if it's in an uptrend, we can do the same thing with call debit spreads. I don't do anything like rolling the trade or adjusting it with the high probabilities. There's too little time, too much gamma risk. There's 252 opportunities a year. There's always tomorrow's trade. Now, what's important is that you track everything like crazy. You got to be maniacal about this stuff. Track your numbers. Make your decisions based on the performance and the numbers, not by what you think. So let me give you an example here. This is a trade that we did recently. Here is the price popping up. And notice that we've already waited for the price to make a gonzo move here. So big move already. We want to piggyback on top of a big move, not before a big move. So we entered the SPX. This is 25 wide put credit spreads for 40 cents. Here's 25 wide call credit spreads for 60 cents in this case. And then we determined the defensive thresholds and above and beyond for the credit spreads. So a day later, both of them fired. Both of these trades fired, and we received a 2.37% return on risk, which is not big. It's not huge, but do that day after day after day after day after day. Remember that 1% rule that I talked to you about. Hold time is about 28 hours. That's not bad. It's just a little over a day. Typical hold time is 2.6 days. Intraday price movement is what makes these things tick. There's always movement. If we can avoid the freight train moves, which we do a good job with, then choppy price behavior allows both sides to fire. The performance that we've had since service inception, win rate 152 out of 167 for 91%, and we have a 1.8 profit factor. For every dollar we lose through trades, we will lose some trades. We win $1.80. You can just print cash with it. Anything above 1.5 means you're printing dollars. We're also working on the low probability neutral, delta neutral iron condor strategy where we do adjust these. So we get a much bigger credit, and this is much, much better for black swans, which we may have in 2023. So what do we do from here to get you on track and under budget here and on time? So nothing I've talked about in this presentation is new. Traders have been selling iron condors on the SPX, for seemingly hundreds of years, for decades. So why is it that so few are profitable? Perhaps they lack the discipline. Maybe they don't have a system. More than likely, they'll lose confidence and give up after the first loss or two. Confidence must begin by gaining knowledge, then applying that knowledge to learn to win. If you need one piece of this puzzle, or maybe several pieces of this, then consider joining me at the 12-Minute Trading Daily Target 100 service. So we meet every day as a team in a live trading room. We meet for up to about an hour or so. We meet at 11 o'clock in the morning, Eastern time. We allow the initial moves of the day to kind of play out, and then we piggyback on top of that. We enter trades every single day to give you reps in the system. If conditions don't warrant a real entry, I'll enter it in sim. Like tomorrow is a sim day because we got the PCE for Friday. All live trades are posted in our class portal with email and SMS notifications. They're backed up by a live tracker. We give you trade updates for giving as many details as you possibly would need to put the trade on, as well as SMS updates as well too. Each day in the trading room, we do a full read on the market, an evaluation of current inventory and what we're doing with current positions, plus new trade entries, which are entered live in the room. Think of every day as a live coaching session with me. So we're doing a special here, 2 weeks of free trial in the Daily Target 100 service, 12minutetrading.com, T100TE. Sherry, if you could put up that URL into the chat box, I would appreciate it. So that's 12minutetrading.com/T100TE. So come and spend 2 weeks with me live. If it works for you, it's only $147 a month to stay. Cancel anytime. That's easy to come up with. Please don't miss out on the free trial, as we're going to take this down soon. So no risk to try it out and learn something. 12minutetrading.com/T100TE for traders exclusive. And that is it. And I have come in right at 12:45. So if there's any questions,
You're right on time.
so if there's any questions, you guys might be able to either hit Sherry or reach me at doc@12minutetrading.com.
Doc at 12minutetrading.com. I just want to put that in the chat as well. Oh, uh-oh. Well, I think it did take me to the right place. Do you see the link that I put in the chat? That isn't right, is it?
Well, we don't need the www and all that stuff in there. So it's just T100. You got ST instead of
There
TE.
you go. Yeah. Well,
So
that's what
just put
came
in
in on my.
if you just put in 12minutetrading.com/T100TE, like traders exclusive. There we go.
It's
that's
not a
it.
link though. There, I'm going to give them a link.
Oh, that'll work. If they paste that into a browser, that'll work.
Okay.
Trying to
Well,
keep
there
it
we go.
simple without all the HTTPS and all that stuff. Colons.
Well, the thing about the HTTP, like the way it is in the chat right now, a person just has to click on it and then you can open it up, right? They don't have to copy and paste it at all. You just have to click on it. Now you'll want to copy and paste Doc's email address. And by the way, how long will this be open? We get a lot of replays. So will it be just a few days that you'll have this?
It'll be open for about a week.
Okay, awesome. So if you're watching this as a recording, this is something you're going to want to go take advantage of. This looks fantastic. I really appreciate you being with us.
Thank you, Sherry. Thank you for everybody's attention. Appreciate it. Hope to see you guys soon.
Thank you. Yes, sir. Have a great day. All righty. Let's see. Let's go right here. I'm going to bring in our next person as soon as I take the screen back. All right. All right, folks, there we have it. That was our first speaker, Doc Severson at 12-Minute Trading. That was a really great presentation. You ought to really go and look at his offer. We want to remind you that if you have to leave early, you can go to tradersexclusive.com, and then over on the right-hand side of the homepage, there's Trader Education Webinars. See the green arrow? The green arrow is not there on the page. I put that there for this slide. But then you click that, and then you go to the educational webinars, and a replay is going to be posted there. I usually get it up by tomorrow. So next on the lineup, we've got Larry Gaines of Power Cycle Trading. And Larry, I think I might have, I'm not sure I have the right title, but the title that I think it is, How to Trade Extreme Market Uncertainty, Low Risk, High Return Option Strategies, and then maybe it should have said Using Butterflies and Long Condors, but I know you're going to fix that for us. I want to just introduce Larry really quickly. He's been involved in trading and brokering commodities and financial markets for over 30 years. He started his career trading tanker cargoes of foreign crude oil for a leading New York Stock Exchange oil company in the early 80s, and quickly advanced his career to become an executive vice president of one of the largest international oil trading companies in the world. Started trading options in 1987 on cargoes of crude oil. In 2010, started a trading educational company to teach option trading based on his directional trading model and option strategies designed to provide high returns on low defined risk. Did I do that right? Thank you for joining us, Larry.
Well, thank you so much for having me here.
Let's make you the presenter and you can share your screen. Did I butcher the title of your presentation?
No, that's close enough.
Okay.
That's close enough. Thank you so much. Now, can everybody see my screen? Okay, very good.
Best high reward, low risk option strategies for any market environment. Good deal.
Yeah,
And
there you go.
Okay, great.
Make sure I've got everything set up here. Okay, I think I'm good to go. So everybody can hear me loud and clear, and Let's get started. So what I'm going to talk about today are some really, for any market environment, but especially when we're in a crazy market where, things are moving really quick and you want to keep your risk and capital at risk super, low and tight. So we're going to talk about the best high reward, low risk option strategies, for these kind of market environments. And that's going to be the butterfly and the long condor. So the following presentation is purely for educational purposes. Any stocks, futures, or options mentioned does not constitute advice and should not be construed as a recommendation. Now, I've been trading options. I started back, trading options for over 30 years, back in '87 on cargoes and crude. But what I found over the course of my option trading experience or journey is that the most valuable go-to option strategies that can really literally help any trader or investor more than any other type of option strategy known, and especially during extreme market uncertainty, are the option butterfly and long condors. So they're kind of what I call my trading secret weapon. Now, the huge advantage that these strategies have is their unique option framework that's designed to take advantage of both the time decay or theta and volatility, the two main option pricing components, to really stack the trading odds way in your favor. And they can be used in any type of market environment, which makes them the really favorite trading strategy, especially when we get in these extreme markets conditions. It just comes down if you just know when and how to use them. So because they're structured to require only a small amount of your hard-earned capital, your trading returns can be very explosive. So I kind of call it like lightning in a bottle, because you'll see the risk-reward profile is very, very large. And when you get it right, it can be something you want to bottle up and keep doing it each and every time. So the butterflies and long condors, they're very dynamic and they can be traded for a variety of different reasons with different goals in mind. So in other words, once you learn how to trade butterflies and the long condor, you're going to be covered for both your offense and your defense, so your goals and your protection. Now, these two strategies can work no matter what the markets are doing. They can be an uptrend, down, sideways trend, trending market. Can provide income from stocks that are going nowhere, eliminates the stress of having to be perfect on your stock's direction or overall market, direction, eliminates the time decay expense that's encountered from decaying long options, takes that unsettling guesswork out of your trading, and they can be structured for very low cost, low capital at risk type trades, offering you returns of anywhere from 10 to 1 or even higher reward to your risk. And that's what makes them so great for these types of markets, because we can keep our risks very low but have huge returns potential. Now, the butterfly along condors, they can also be used for hedging when you mess something up, and that's going to happen, especially in these kind of markets. So they can be used as a kind of what I call a fast, low-cost way to cover your pronto when a position starts to move against you. And I've literally found no other hedging strategy that comes close to using these two strategies. Now, by constructing either a butterfly or long condor around your strike that is under pressure from another core trade position that you might have on, such as a credit spread or a debit spread, it really becomes a great way to immediately neutralize and also lower your risk. So if you've been doing credit spreads, you probably have been in that situation where it gets through your short strike, and then if you don't take action quickly, you're going to be underwater fast. But we can hedge credit spreads or debit spreads using either a butterfly or long condor. So one of my members to my alert service or web service, Pam, she said, I wish I'd known how to do this hedging before I lost so much money on credit spreads. And that's so true if you've done credit spreads. Now, when we look at the butterfly, they're fairly simplistic. So here's kind of an example. So this would be like a call debit spread. So we can use butterflies with calls or puts, to trade market direction, etc. So this would be like long a call, short a call. So this would be a debit spread. So the risk here, if you look down here, so the spread width is 1,010, and then your short strike is right there at 1,020. So it's a $10 wide spread, or that'd be $1,000. And your total risk, then is your debit paid of $300. So you've got a potential to make, $700 on that risk of 300. But if we want to reduce that risk even more, we can quickly do that, neutralize it, and reduce risk by adding another spread to it, which would make it into a butterfly. So we could add quickly a credit spread and bring in $200 in this example, and we'd have a short call here, long call here, same spread width, $10 or $1,000, and our credit would be 200. So now we've reduced that debit cost down from 300 by the credit we brought in of 200, and now we've produced a butterfly with a total of $100 risk. So with actually a huge potential upside, potential return. So this is the top of the tent, which we call that the kind of the max profit zone. And what we've done is we've gone from $300 risk to 100, but we still, with this $10 wide spread or $1,000, now our risk is only 100. So the difference being 900 is our potential return or profit if it goes out at the top of that tent at expiration. So that's what's really exciting about using these types of strategies. So hopefully you can see the benefit that you would get with these kind of crazy markets. Now the long condor is similar, kind of call it the cousin to the butterfly. But the thing with the condor is we can widen out the body. So we can widen out the profit zone here. So instead of really having a kind of a tight threading the needle with the butterfly, when we widen that out, that creates what we call the long condor. So it's a great strategy as well. So these two are just, really great for these types of markets that we're currently in. So let me get rid of this drawing tool. Now, the core concept that really make the butterfly long condor work, let's take a look. So the most important option factor for profit generation using either the butterfly or long condor really comes down to understanding option pricing and the concept of how time decay or theta it affects the price of your option. So let's take a kind of quick review of that core concept. Now, when we look at theta, theta tells us how much your option price will go down over time. So it's the rate of that time decay of your stock option. And this time decay occurs because that extrinsic value or that time value of your option is going to diminish each and every day as we get closer and closer to expiration. And at expiration, day zero is going to be worthless. So we need to really capitalize on that or be aware of that. Here's an example kind of illustrating a kind of simple butterfly, but showing you the risk reward profile. So this is like XYZ and it's trading at 45. And we're looking for just, in this example, a small move down to $43. So this is what I would call my price target, 43. That's kind of where we're targeting. And I'll establish these targets typically using Fibonacci and moving average kind of support resistance levels. So in this example, we're looking to target 43 on a little downside move. So we could come out here and we could buy a 44 put, cost 238. That would be your debit cost. Then sell against it the 43 put, bring it $1.67. Sell another leg at $1.67, and then buy the 42 put below at $1.06. So we've got that spread. If you can see here, 44 minus 43, a dollar wide spread. Now our risk on this trade, then you can see what it'll be. So we have a debit cost of 238, $1.06 from the two long legs, and then we brought in $1.67 twice, times 100 for the spread. So the max risk and capital put up would be $10 per spread. So if you did one spread, 10. If you did 10, that'd be 100. So you can see the super low capital that you can put up and be involved in these trades. Now your profit is just take that middle strike, like 43 less your 42. You can see that's going to be a dollar wide spread less your debit cost of 10. So in this example, your total potential reward or profit at expiration, if it hits your target price of 43, would be $90 per spread on that risk of 10. That's a 900% return, or you're risking $1 to make 9. So those are the profile, which makes it extremely attractive, really in any kind of market condition. Now, the thing next we're going to look at is how do you choose the best butterfly, or long condor strategy for your trading goals. One major goal, in my opinion, for every trader should be looking to select trades based on what's going to provide you the most consistent positive return over time with low defined risk, and not always looking to hit that great home run. So, in trading, my kind of philosophy is to look at, hitting singles and doubles, and occasionally we'll get that triple or home run, and that's what the butterfly can provide for you. And one of the best ways then to achieve this kind of goal is to be aware of the different option strategies that are out there and available to you, understand how they work, and then select the best one that's for your, matches your trading, your goal, and your risk profile. So everybody here today will have a different amount of capital that you can put at risk, different risk profile of each person. But the thing with the butterfly, you can have a small capital account. You could have $1,000 account, or you could be a hedge fund and have millions. We used to trade huge butterfly positions on crude. So, anybody can use them, and they're very low cost, but they can be really scaled up if you want to do it that way. Now, when we look at the butterfly, I kind of call it the butterfly family. So there are a number of variations for butterflies, and condor, but they all involve that pricing component where we're selling time, and volatility is part of the component of the butterfly spread. So we can do a long call or put butterfly. We can do what's called a broken wing or skip strike butterfly using calls or puts. We can use kind of what I call the ninja butterfly, which is an unbalanced or ratio butterfly. We've got the iron butterfly, and then we've got hedging and defense strategies used in the butterfly. And then we've got that kind of cousin of it, the long condor option spread. So there are a number of variations. And so we're going to cover a few here today. So let's take a look at a few and review back on some butterflies that we've done in the past, kind of give you an example of what they can do. So first we're going to look at, butterflies, and one more thing to point out is, how you can adjust your risk and your profit using a butterfly. And you do that using what we call the wingspan. So for example, let's say you are actually looking to capture and, collect butterflies. Well, the easiest way to catch a butterfly would be probably with a big wide net, right, versus a smaller net. So the butterfly concept, the adjusting our risk, we can do that with the wingspan of that butterfly. So if we want a really large profit zone, we can make it a really wide wing butterfly. So that's going to increase the area that we can make profit in, but it increases our risk a little bit more. But if we want to really narrow in and define that risk even lower, we can narrow that butterfly, make it really narrow. So that's the kind of adjusting with wingspan of your butterfly. So there's your, profile of a butterfly. It kind of looks like a tent. And if you get to the top of it, that would be your target that you're targeting. That's where you get your max profit. So here's an example of a very narrow wing butterfly on SPY. So the other thing with butterflies, they're fantastic with your ETFs such as SPY or the Russell IWM or the QQQ. And they're also great with index options, such as the SPX or NDX. And great for stocks, but you want to have liquidity. So, but they're great for ETFs. We do a lot of ETF butterflies, and if I have time today, I'll show you one that we just did. So the first one we'll take a look at is SPY, so the S&P 500. So in this example, we were targeting a move up to, it was trading at 266, 267, and we were targeting 273. So when I set butterflies, I set it for a target, the body for a target at that target. So we were targeting this area right here. You can see this was like a Fibonacci level coming in at 273, 274. So when we set the trade up, it was trading down here. So we did a butterfly targeting this target here around 273. So we did it really narrow wing and made it super low risk. So let's pull that up. So what we did was we went out and it was trading at 267. So what we did was we targeted the 273 strike here. So we bought the 272 call, sold the 273, sold that 73 again, and then bought the 274. So we had a narrow wing butterfly. Now the spread width of this was, you can see down here, 10 cents or $10. So the spread is a $100 wide spread, less our cost of 10 cents or $10. So the potential profit is the difference of $90 per spread, which would be a 900% return. Now in this example, we ended up making $70, which is a 700% return. So, if you're ever told your buddies or whatever that hey, I just made 700% return, they probably think you're lying, but that's pretty much the outcome and the potential that you can get from butterflies. So all the option spreads, the butterfly will give you the greatest risk reward return. So here's the profile of what this one looked like going out at the right close to the 273, not exact, but very close. So you can see that very close to the top of that 10th there. And that little black area is what's left of potential profit from the theta decay and volatility that would be stripped out towards the end of the day. So this went from a 10-cent debit or $10 debit to 80. So there's your $70 per spread on that risk of 10. That's a 700% return. In this situation, was over a 2-day period. So the big advantage, you're getting that time decay from that selling side component, volatility collapse, and high return on your capital at risk. Now, let's take a look at a wide wing butterfly. So typically, I like to look at wider wing butterflies because it gives us our bigger profit zone to participate in profits, and we don't have to wait all the way to expiration to get the max profit. So the wide wing butterfly is going to give you a wider profit zone. They're structured for, again, for very defined risk, great for hedging, used for what I call targeted directional swing trades, trades that last a day to 2 weeks, or something like that. Great for what we call a pinning trade, where we're trying to look at a strike that may be, go out at expiration, and we're playing that strike for expiration date. That's what we call a pin. Great for high volatility markets. Great for high price stocks, which I'll show you a great example of that. You know, a lot of times what I'll show you is Amazon back when it was trading over $1,000 per share. You know, it was very, very difficult for most traders to trade it because it just cost too much capital. But with the butterfly, it was easily done, which I'll show you in a couple of minutes. So trade durations can last anywhere from just as long as 1 day up to 2 weeks. No theta decay, so it has positive theta, which is great. And you get your returns to risk of either 2 to 1 or 10 to 1 or higher. So it gives you a lot of great benefits when you're using these two types of strategies. Now here's one to show you Amazon, okay? So this is an example of how you can trade a high price stock with lowered risk using a wide wing butterfly. So this was a $10 wide spread or $1,000. So this was back, you know, when Amazon was trading over, you know, close to $2,000 per share. So this trade was set up as a targeted trade. We were targeting 1830 level right here based on a Fibonacci level. So it had come down here and set on the support level. This was like a 200-day moving average, and it had just been chopping around like that. So we wanted to set a target, you know, about 1830 based on that fib level. So we did this, and it was, you know, trading at 1,782. So if you bought 100 shares of that, you're you know, basically out of pocket would be $178,200, right? But we could do this trade for a minimal amount of capital if we structured a butterfly. So what we did was we did a butterfly, again, targeting that upside profit target of 1830. So targeting 1830. Now, if you've done the shares and you bought 100 shares, you know, you've got a risk of over $178,000. Now, if it did go up and hit your 1830 price, you would have made $48 per share. But look at your return on capital, 2.69% for a huge amount of risk that you're taking. Now, the other thing that you could do was a butterfly. So we did this butterfly targeting 1830. So we bought the 1820 call, sold the 1830, sold it again, bought the 1840. So $10 wide spread or $1,000. The cost of the trade when we put it on was 80 cents or $80. So your net return, if you hit that 1830 at expiration, would be $920. That's over 1,000% return, you know, based on that return on your debit of $80. So you're risking $1 to make potentially 11.5. But if you come anywhere inside in between, you've got this huge zone for profit. You don't have to get it perfect. And that's why you can participate in the upside or downside move with low risk and still have a great return on that low risk. So the other thing about it is to show you how this can really compound or, you know, increase your, you know, like a 3 to 4x within the same day. So this is an example to show you in the morning on expiration day on the 6th, which was the expiration day. It was trading at 1836, so very close. Overshot our 1830 a little bit, but in the morning on the AM, it was trading at 1836. Now, at that point in time, the spread was up from 80 cents, $80 to $2.30 or $230. So still a really nice return. This was up $150 per spread, which is a 187% return, which is still a great return on that lowered risk of 80. So 80 bucks versus over $100,000 is a super great kind of risk profile. Now that was in the morning. Now in the afternoon, about 3-4 hours later, this thing was up 400 times more, 4 times more. So let's take a look. So the same day, but just in the afternoon. So in the afternoon, based on the structure of the trade where we're stripping out that theta and volatility as we go into the close, this trade was now trading, you can see that top of that tip, that black area. So it's very little time decay and volatility left, and we've stripped out a lot of it, that area there. So this went from, in the afternoon, from 80 cents, $80, now it was up to $695 per spread. So that was now a $614 per spread profit, or on your risk of 80, that's a 769% return, versus if you'd done the stock and you got up there, you had a 2.69. So that's another huge benefit, is you can get that additional return just from letting this thing work for you, because time goes to zero and volatility. So here it is, look at it one more time. So here it was at 6:14 in the afternoon, 769% up. The day earlier in the day, this was up $150 per spread, or 187. See that black area? That's all that's the potential profit from time and volatility that's in that spread component. So that's a really cool thing about it. Now, the next one I'll show you is another one that we did was Apple. So this was a directional wide wing put butterfly looking for a downside move. So with Apple, you know, we're a little reluctant to short it, but this was a way to short it with very little risk. So we did this with Apple, $500 wide spread. And I've got alert service, and this was sent out to our alert members. So you can see kind of this description of it. Says new Apple short, trading around a 145.62, daily close below 140, opens the door up for potential move lower. So we did a butterfly here where we bought the 7 October 145 put, shorted the 140, and then bought the 135. So we had a put butterfly, and our total capital at risk was $74. So that put us into that trade at a very reasonable, you know, risk area. And a lot of times it reduces. I call these things reducing your stress, because you don't have to be as stressed out about $74 versus thousands of dollars. So as we got into the expiration, I'll show you here in a second, but we did the 145 put long, short the 140, and then long the 135. So we did that put butterfly, $5 wide spread, or 500. Our cost of the trade 74. So potential reward if we hit the 140 at expiration would be 426 or 577% return. So we don't go in thinking, okay, we're going to get it right perfect. If we had just participated at all, we're still getting a big fat return on that lowered capital at risk. So at the end of the day, you can see here it was, we shorted it. This was a chart I do my trades based on a trading model using momentum. Our momentum was down, that came off, and we were targeting that 140 at expiration, right down around there. So as it goes out at expiration, here's what it was. So the entry was on the 29th, expiration is on the 7th. So this is about 8 days later. So we had it trading at 140.29. So now it's up $322 on that risk going in at 74. So you can see it went from, this was on the 7th expiration, very close to our top of the profit tent. So for $74 risk, now we're at 396 profit, which it was trading at the spread 396, which is a $322 profit per spread, or 435% return, versus if you did the shares, you made 3.66. So just a kind of a no comparison as far as the potential that you get from this and the less stress that you're going to get from your trades. Plus positive theta, which is something I always strive for. And here's another example. This is again an alert trade that we sent out. This was on Exxon. So this is what we call a penning trade. So in Exxon, we were looking for a move and a potential pin to the trade down to, let's see, we were looking for it to go down to about 110. So we did this as what we call a penny trade. So we were risking $55 and had a potential to make $245 or 445% return. So you can see if you look at the description of the trade, it says new Exxon Mobil monthly penning trade, trading around 113, monthly option penning trade. It says long the 113 put, short the 110, long the 107. So that was the trade structure. And then that's when we took it off on the 18th. So here's what it looked like going out towards that expiration period. If I can flip my slide here for you. So we had Exxon trading here, moving down. We were targeting this 110 area right over here. And so we set the butterfly, and we did this with a November 18 butterfly targeting 110. So we bought the 113 put, sold the 110, bought the 107. So $3 wide spread. So $300 less our risk of 55. Gave us a potential to make 245 if it was perfect, which would be a 445% return. Okay, so we came pretty close, but still a great return. So here it was going out. This is a risk profile as it goes out here on the 18th. So it was trading at that point in time, it was trading at 110.19 right there. So right about there. So you can see that's still a potential profit, but we wanted to take this off. We didn't want the trade to move up the gamma risk. So we went ahead and took it off. And so we got into the trade at 55, went out of the trade at $1.75 or $175. So $120 per spread profit on that risk of 55. That's a 218% return, or risking $1 to make 218. So that's another, great example of the benefit that you get from this kind of low cost, high reward trade setup. Now, the next example I want to show you is a kind of what we call hedging with using what we call a butterfly hedge or a condor hedge. So in this example, we were short QQQ, doing it with a long put debit spread. And then we adjusted the trade into a long put condor free trade. So I'm always looking for, when you're trading, think 2 or 3 steps ahead, just like if you're playing, cards or chess, think about what's going to be your next move if a certain thing happens. So that's what you want to do. That's the cool thing with options. We can plan ahead. So if a certain price gets hit, we might want to make an adjustment. In this case, we had a certain price hit. We were able to adjust it, cover all of our costs of the debit price of the put spread, recoup that, and actually get a credit and had a free trade. So this is an example of that. So we were into the trade. We were initially short using QQQ and short right here. Our indicators were pointing down, so we went short, and we did this initially with a put debit spread. So then we traded or adjusted it. This was on the 28th. It was traded at 365. It went down to our first target. Instead of taking profit on the whole trade, we were able to adjust it to a free trade. So the first, we did that adjustment to a free trade, and then that was trading at 354, and then we closed it out on the 6th when it's trading at 359 for a max profit on the Condor hedge. So here was the trade 1. So to kind of step you through it, trade 1, we had a put debit spread, a nice trade setup, long the 364 put, short the 360, $4 wide spread. The max risk on that trade was $121. That was the spread, the debit cost. And so the potential profit, $4 wide or 400 lesser cost, we had a potential to make $279 or 230% return, which is really nice. So, what we typically will do, we'll take some profit, and then if we get the chance to adjust the trade to anything to a free trade or something, in this one a credit, we go ahead and make that adjustment. So what we did was, when it traded down here to trade 2, it was trading at 354. So we had a really big move down, 365 down to 364 or 354. So instead of taking the max, all the profit off, we adjusted it and made it a condor, a put condor. So we went short the 354 put, long the 350. So $4 wide credit spread. We brought in $141 credit. So you can see that then adjusted this trade. So now we were into that free trade. So we'd covered our debit costs of 121. We actually had a credit now because we brought in more than our debit cost. So now we were into this trade. And if it went straight down, we still make 20. If it went straight down, we make 20. If it goes straight up, we make 20. If it goes out between the spreads right here, we have our max profit on the trade. So the max profit on this one was $420 on zero risk if we were able to go out between the spreads. So that's the beauty of it, that you can adjust these things to some really nice, big, huge home runs. So you can see here, just kind of backing up a minute, we went from that 121 put debit spread cost. Now that was a max profit and went to $4 or 400. And then we had the credit spread side. We were short the $141 credit. That went to zero. So we had our max profit was $420 going out right there between those two short strikes of the spread. So that's a really cool thing about these types of strategies. You can really adjust them to perform in these kind of crazy market environment. So if you'd like to learn more on how to master these high reward, low risk option strategies that can work in any market environment, then I've got a really great package for you here today. So this is my Butterfly Long Condor Option Masters course that I did about a couple months back, and we recorded it. So it's all recorded in modules, and it's available here today for you if you'd like to jump into it. So it's a 7+ hour recorded trading course. And I put the link up. I handed it to Sherry, so if she could put it out there, you can link on this. You should be able to click it, and it will pull up this drop down and show you what you can get for this 197. So with this offer here today, you're going to get my 7+ hour recorded course on just the Butterfly and the Long Condor. It comes with the 30-minute modules of recordings broken down like chapters of a book. You'll get the 456-page PowerPoint manual. These are very extensive courses that I do. So I've got another 6 bonuses for you, kind of a 6 bonus Christmas package here that we'll go through. And you can get it all here today at $197. So if you decide to jump into this thing, what you're going to get is you're going to get the full course. If you go to my website, powercycletrading.com, the course is offered at $397 with no additional benefits. But today, you're going to get everything for $197 plus these bonuses. So you're going to also get my Start Trading Options. So this is a comprehensive kind of beginner's option course. So that'll get you started. So you're going to get that. That's a value of $97. And then you're going to get a 30-day trial membership to my PowerCycle Trading Club, value of $97. If you stay in, then it's $97 a month, or you can do an annual membership for less. Then we'll do a follow-up Q&A. We'll send you a email with a link for that in about a week, maybe 2 weeks. So you're going to get that. And then I'm going to give you my How the Pros Use the Greeks, another option guide, kind of a short option course on the Greeks, Delta, Theta, Gamma, things like that. You'll get my option strategy manifesto. So this is 15 other option strategies to kind of guide you through what they are, how they work, and my Greek power tool guides, a printout you can put on your desktop and use it to refer to if you're familiar with or not familiar with, say, gamma risk or something like that. So the value of all that, $982 if you order it here, $197. And let's go through the bonuses, and then if I have time, I'll be happy to take any of your questions. So with this, you're going to get the 7-hour recorded course. It's broken down in modules of 30 minutes or less, the 456 training manual of the entire course. So it's kind of my blueprint course on how to use the Condor and the Butterflies for income, high reward, low risk directional trades, non-directional trades, and hedging. So you're going to get that. And the course, here's kind of a summary of how it kind of flows. So part 1, I start out with the course on the option Greeks that are vital to using the Butterfly Long Condor, how theta decay impacts the Butterfly Long Condor, and how volatility does the same, and the importance of what we call volatility crush. So we go through that in quite a bit of detail. And so then go into the option pricing, how that affects, time and volatility affect the price or affect the Butterfly, how that works. Another part of the course we go through to help you target your trades is what I call Fibonacci price target mapping. So this is a part of the course, a chapter where we use Fibonacci and standard deviation price forecast to select our price targets for the butterfly. So that's part one. Then part two, we get into all the different variations. So in that part of the course, we go through every variation of a butterfly and how, when, and why to use the variation. So we'll go through with examples in the course of what a long call and put butterfly, how, why, and when to use that, the wide wing butterfly, a broken wing wide wing butterfly, ratio butterfly, broken wing ratio butterfly, iron butterfly, vacation butterfly, and the long iron condor. So we'll go through, all those different variations with trade examples, so we have a good, clear example idea of how to use those. So that's part two, and then part three, we go through what are the best time frames, how to structure 10 to 1 or higher, monthly option expiration, long condors, kind of running out of time, so I'm kind of racing through. And then hedging, a whole section on hedging, progression of hedging, and how to use the butterfly condor to hedge core positions or defend vertical and debit spreads. So you get all that, and a little feedback. I've never seen anyone explain options like this. Excellent. This is exactly what I've been looking for. Very informative. No one has anything like it. Wish I had found you sooner. Thanks again, Alicia. So a little feedback there. The bonus package, you're going to start trading options today. So this is a 3-hour option course with videos and the PowerPoint on the benefits of options versus stocks, expiration, beginning option strategy 1, covered calls, and a covered call protective put strategy. Then you're going to get a 30-day trial membership. You can start it whenever you want. This gives you access to my virtual trading room every day, trade selections. We have a trading video archive, weekly Q&As every Tuesday, Traders Education Vault, 60% discounts on all courses and software on my website. You get bonus 3, a follow-up Q&A, plus that 30-day trial membership, and then how the pros use the Greeks. So this goes through the Greeks of delta, gamma, theta, shows you how those are used. And here's the other bonus, 15 option strategies. So we'll go through in trade construction when you use, say, a back ratio spread or a long strangle. So just a really good to clarify those. And then your option Greek guide here, so to put that on your desktop. So that's everything, a great package, and please, hopefully you'll sign up here and join us and join in with me for other courses that I do down the road. So I'm typically doing something every week. Usually everything's based on options, and so I sure would like to have you sign up. And if you want to also make sure to go to my website, powercycletrading.com. We're having a special holiday sale where you can get 60% off on any courses that I've done, any of my trading software. So check that out as well, powercycletrading.com. So thank you so much for being here, and happy holidays and Merry Christmas to everybody. And again, thanks for having me today.
Larry, thank you so much for being with us. That was awesome. And guys, you need to get this. And by the way, you're going to get email from every speaker. We are going to have a recording that goes up on tradersexclusive.com/archived_webinars. And these are just offers that we're so excited that these speakers will make for us, for you all that come to the Traders Exclusive webinars. So Larry, thank you again so much. I hope you have a wonderful holiday season.
You as well.
All right. Have a great day.
Thank you. Bye-bye.
All right, folks. Wasn't that awesome? Now let's see. I'm going to go to taking me a little time to move around, show my screen. Are you seeing my screen? That was Larry Gaines with Power Cycle Trading. Take advantage of that link that we put in the chat bar. And then I'd like to introduce to you our next speaker coming up is Todd Bubba Horwitz of BubbaTrading.com. And I'm so happy that you came back again to be with us. I'm going to introduce you, and then you're going to get to take it away.
I'm ready.
So for nearly, okay, you always are ready. For nearly 40 years, Todd Bubba Horwitz has enjoyed a successful career in the financial industry, He began his profession in 1980 and was one of the original market makers in the SPX trading pit at the CBOE. He has traded at all of the major exchanges in Chicago and is currently a member of the CBOT. In addition to his trading for the past 8 years, he has concentrated on writing, education, and a media career. In addition to his career as a skilled trader and investor, Bubba has spent the last 8 years as a mentor and educator to traders of all levels. And he continues to concentrate on the education and training of would-be investors, teaching them the ins and outs of professional trader. As the founder and chief strategist of BubbaTrading.com, Bubba manages the development and distribution of market content, product development, and trade ideas, and is an awesome speaker, and he's joining us today.
It's great to be here, Sherry. Happy holidays, Merry
you.
Christmas, Happy New Year, Happy Hanukkah, Happy Kwanzaa, and Happy Festivus.
Oh, good for you. That's a big list, and thank you. Now I've made you the presenter. Do you like to see the questions on the fly? You like them to wait till the end?
Either way, I'm good either, but I got to figure out how to share the screen I want to share. Let's see.
I can see all your charts. Is that the one you wanted to share?
No, I want to share. I got a PowerPoint up here somewhere. I'm just trying to figure out how to get to it.
Okay. You know, I'm going to have to do a poll every time I introduce someone. How many screens are you working with today?
I got 6, and I need. I'll find it in a second. Let's see. 1, 2, 3, 4, 5.
You probably have to unshare it and
There
then
we go.
reshare
I
it.
got it. There. That should be it, right?
Well, I went back. Now you got the micro mini
There
portfolio
you go.
management.
That's what I want.
Awesome. All right. Well, then I'm going to mute myself
You can
and
see
let
these
you take it
charts if I
away.
prop them up, right?
Yes. Yes,
Okay.
they're there.
Cool. All right.
All right.
I'm ready. What do I have?
All right.
45
Take it
minutes?
away.
Is that my time frame? 45 minutes?
Yes, sir. 45 minutes.
I better speak fast. Anyways,
Not too fast.
what's up, everybody? Welcome aboard. And it's always great to be a part of a Traders Exclusive event. And they do a great job with bringing in really good speakers and really good stuff. And I'm just one of them. I'm just part of the team. And you know, I've traded everything, and I still do trade everything. I mean, it's not like I limit myself to one thing, but I think one of the best products I have is the micro mini portfolio management. And it's because it offers a wide, diversified, depending on the amount of capital that you want to play with. And so we have a lot of fun with it. And you know, again, I've been doing it for years and been trading in my own little sphere. You know, from a floor trader to had to convert to a screen trader because there is no more floor. So anyways, let us begin. And of course, the first part of it is always the disclaimer, because, you know, whatever I've done in the past does not guarantee what's going to happen in the future. I can only base and tell you who I am and what I've done. I don't want you to come in thinking that you're going to get rich tomorrow, because you're not. Okay, this is not a get rich quick scheme. There is no false promises here. This is just simply what I do every day. I'm involved in everything that I do. I trade myself as well. So just to be prepared. But the biggest thing that I've always found in the world is only you can change your life. No one can do it for you, right? We're all saps for all the promises and all the false hopes that are delivered out there. And you know, look, there's no free lunch. Nobody's on the street corner handing out $100 bills. Okay, that's the way that I look at life. And I've done this again this is my 44th year as a professional trader, trading my own money. I don't trade anybody else's money. I trade my own money. Okay, and I'm the only guy on TV that trades his own money. I don't have a fund. I trade for me. Okay. But I am Todd Bubba Horwitz, and I've been a 43 member of all the Chicago exchanges. I'm still a member of the Board of Trade. I contribute to all the major networks, and I do trade every recommendation that leaves my office. I'm also involved in it. Okay. So again, it's for me to share what I'm doing with you. I've got a live chat room. I do live trading, which is something else, but you'll hear about it as we go through. Now today, we're going to talk about what are our objectives, what are managed futures. It's the math, our portfolios, and how you can take advantage. And of course, I will always take any question that you have, whatever it is. And I've already got some, you know, a few nasty comments about my name. I go, well, that's my name. What can I tell you? But I'm happy to answer anything that you'd like to know. So, and again, anything regarding trading or anything else. I mean, I bet I bet sports, I play poker, so it's all good. In the meantime, you must know this is a business, okay? This is not a game, okay? We're going to compare it to a game later, but overall, you're trading for what reason? To make money. There is no other reason that you're getting involved there, okay? Not because you want to hear me speak. You want to make money, okay? Losses are a part of the business. You do not control the market. You don't need a crystal ball. Short-term results do not matter, okay? You know, I can't tell you what's going to happen in the next 10 minutes, okay? I can give you my best guess, but I can't worry about it. I'm in the game for the long run, okay? Your staying power will bring you success, and your equity curve is a mirror. And that's something that you have to remember at all times, okay? These are things because in this business, I don't care who's talking, I don't care who's told you what. If anybody tells you that there's no such, they don't get drawdowns, they're full of shit, okay? Excuse my language, but that's the bottom line. There is no way, in 44 years, I've never been able to avoid the potential drawdown or drawdowns that happen, okay? They happen. Now, if you learn to understand them, guess what? They can actually be a benefit to you because if you learn how to use them, you know when to add to your position based on your buying power. All right. So, but drawdowns happen, losses happen, and if you don't think so, you shouldn't be here. And you know, my members, okay, I want happy members. I want people that understand. And if you don't want to understand, then you shouldn't be a member. It's as simple as it gets. I'm not looking to sell you anything. I'm looking to help teach you something and put you in a better position in your own life. I already do this, so it's not like it's adding work to my load. Okay. Now we're going to be talking about mechanical trading because that's what we're going to be doing. We're mimicking. If you remember the turtle traders back in the 80s, and I happen to be very good friends with Richard Dennis. Okay. And when he started that, you know, I told him, hey, that was a pretty good idea. You know, we traded together on the Seaboat back in the early 80s. But the major reason traders lose money in the long run is because they miss trades, they let losses runs in the trades they're in, and they take profits far too early. Now, how many of you have done that before? Okay. And any of you says they haven't, well, you know, I got a couple of words for you, and they ain't happy birthday. My method does none of the three, and therefore our odds of winning are greatly enhanced and proven by real-time results. We cannot miss a major move in any market. We do not let losses run. We always let profits run. That is because the algorithm that we use was designed to do just those three things. Okay, because we're doing everything automated. We're not making a decision because some of the decisions we would make mentally, we would never make, you know, which are always usually wrong. Okay. Now, we use a lot of micros in some of our portfolios. Why? Because it gives you a smaller risk. Depending on your capital, you want to be able to participate. And believe it or not, the micros are the biggest product in the history of the Chicago Mercantile Exchange. Okay, they scale index options up or down. You can scale yourself into a trade. You can get yourself bigger. And in fact, in our day trading model, which I'm going to talk about later, I'm actually been impressed from that in that particular model from 1 to 2. Okay. You get great margin advantages because you can get day trading margins if you want to do some day trading, and you get great tax advantages. And it's called 1256 income, and it's a much better facet of paying taxes than it is in trading equities. Now, again, I'm not telling you not to trade equities. I'm telling you that if you're going to be an active trader, you know, futures is by far the best. Okay, from a tax standpoint. And again, it's 1256 income. But don't take my word for it. Talk to your accountant. Okay. Now, I call this next big thing because, again, we've been able to create a number of different portfolios that use a blend or use, you know, some of the portfolios only use the regular size futures. Some use micros and many, some use micros only. And some products that don't have micros yet, so we haven't been able to implement them yet into the model. But using the right size for your account is always one of the most important things that you can do. Okay, the worst thing you can do as a trader is to outsize yourself in the market. Okay, if you put yourself in a position that you can't sleep at night because you're worried about the size of your position, you're trading above your means. All right, and you cannot do that. If you want to be successful in this business, money is it. Okay, if the money is bothering you, you're trading too big. Okay, I talk about that every single day. Now, secret systems, there ain't no secrets. Okay, let's stop with the BS and forget about, I got this secret, I got that secret, this secret indicator. There is no secret indicators. This business has been around for hundreds of years. Okay, and you can go back before there was official markets. People were trading. Okay, the markets are about price discovery and where is the path of least resistance in the direction of the market. So forget about listening to the news, listening to the experts, because you will lose money. Okay, because they don't have your best interest in your heart. It's the same as the risk on, risk off trade. You know why the risk on, risk off trade was created? It was created for the advisors because they had to keep you in the market so that they could get their commissions, not because they had your best interest. If I knew when it was time to be risk on or risk off, I would be able to time the market. Now, you've yet to find anybody in 44 years and watching thousands of traders bust out on the trading floor being able to time the market. But I will share the secret of success, and that is simply what? Understanding probability. Okay. Trading is a probability model. Okay. It's no different than if you play poker, if you're any good. Okay. And I play poker and I make money playing poker. In fact, I live in Vegas now part-time, but I actually lived in Vegas in 1993. I lived at the Mirage Hotel for a year and played poker every day. It just wasn't enough money for me. Okay. And poker wasn't what it is today. Gin, backgammon, bridge, those are all mathematical games, okay, that you may not win every time, and you won't. You're going to get big hands knocked off that you were the favorite going in. But at the end of the day, if you continue to play the probability, you are putting yourself in a position to be a winner over time, all right? Because you got to continue to play the probability. It's nothing else. That's all we're playing, is putting yourself in the best position. And of course, over the past year, the markets have been in the worst position for us as trend traders. Does anybody know why? Just out of curiosity, what's made the market so tough the last year or last couple of years? Just out of curiosity. If you know, if you don't know, it's okay too. I'll tell you why, but I'm just curious if you understand how the markets work, because there are certain patterns that are much better for traders than others. Okay, but I've got thousands of positive notes, but this one was one of my favorites. And why? Because look where it's from. It's from a professor and an author at Cornell University. Very impressive market analysis, uses the best in the world, most consistent methodology, most rigorous. Drop the emotions, don't listen to the pundits who comment on casualty based on reading the news. Okay, that's always been one of my favorites, because again, where it's from. Okay, now we're very rule-based, and if you cannot follow rules, you shouldn't be here. Okay, you shouldn't be trading. If you can't follow and develop a set of rules, you should not be trading, because you will end up blowing yourself up. Okay, it's just a matter of fact. It's a matter of circumstance that you have to know. We know before we enter a trade where we're getting out. Okay, we know what our risk is, our exposure is, before we start. Okay, and that is based on the algorithm, or if I'm trading manually, based on the numbers. There is no reason not to follow a set of rules, but some people have a great deal of difficulty following rules. And if that is you, then again, you should not be trading. Now, if you're looking at rule-based, there's no opinion, there's no timing. You're trading just the facts of the market, and you make every trade no matter what. Now, too many people don't like to do that. They like to try to, figure out, well, they want to cherry pick the trade. Well, cherry picking is for the farmers. It shouldn't be for traders. Okay. If you're gambling, you're trading subjective, you're opinionated, you're emotional, you have no facts, and you're trying to hand pick. If you do that, you have no chance. Again, I'm going to be straight and honest with you. I don't believe in BS. I believe in being honest to everybody, because I think it's important that you, as a prospective member, but even for yourself, whether or not you become a member of mine, I really don't care. Okay, I'm gonna live, and I live good. Okay, whether you become a member or not. I do this because I like to educate and help people, which is the same reason I put together a high school program, which I finance myself. The only problem I have now is, since COVID, it's hard to get these teachers to get back in line. They don't want to work that hard. But that's another story for another day. Now, our rules are very simple. To win with algorithmic mechanical trading, you must have no opinions about the market. Okay. Now, do I have an opinion? Of course I have an opinion. I'd lie to you if I told you I didn't have an opinion, but I don't trade my opinion. Okay. I have to have an opinion because I do a lot of media, so I have to give them an opinion. But my opinion will always be the direction of the algorithm. Even if it's truly not, that's the opinion I'm going to display because I'm never going to go against what my algorithms tell me to do. If you pay attention to the news, you will lose money. Okay, the news is worthless. There is in 2022 and going into 23, the news gets to everybody so fast that you have no chance. In 1980, you might have had a couple of shots at it. In 2022, you have no chance. If for 1 minute you think you know more than the market, price is too high or too low, the market will take your money because it will always punish traders with so much hubris. Okay. We never sell at the top, nor do we buy at the bottom. That is for fools who insist on being right as opposed to making money. If the market is going higher and you are short, the market is right and you are wrong. If you're long and the market is going down, you are wrong. And again, it's recognizing if you make a bad trade, exiting that bad trade and moving forward. Okay. Trend mechanical trading gives you a statistical edge you cannot obtain elsewhere. Profitable traders understand that edges are essential to long-term profitability. And that was, as a floor trader, getting the edge was the entire deal of trading. Okay. Now, what are our objectives? Well, geez, we want to make money. Shocking. Okay. We try to keep the variance small. Now, I can't always promise that. Okay. A lot of it depends on you. You know, it depends on the leverage that you're willing to take. And if you become over leveraged, it becomes a problem. Okay. We want to try to be balanced. All right. And our portfolios are relatively balanced. And we want to try to keep the drawdown small. Now, none of those are guaranteed at any one given time. We've had some big drawdowns. Okay. And we've had some bad trades. Well, not bad trades, but bad runs or bad sessions. And of course, the question I asked a few minutes ago, the reason that it's been such a struggle is because the markets have been stuck in basically a wide sweeping consolidation pattern, which is virtually an impossible pattern if you're a trend trader. Okay. And to my friend Richard Dennis, a good trend following system will keep you in the market until there's evidence that the trend has changed. And I'll give you a quick example. I can't remember the exact year, but Amazon reported earnings in October and they got clobbered. And all of my people we were long the NASDAQ about 48 weeks out of the 52 that year. And everybody was worried and they were panicking. We should dump the NASDAQ. And I said, look, whatever you want to do is fine. I'm holding until the pattern changes. And of course, by the end of the year, the NASDAQ had gained another $52,000 in profit. And everybody who dumped it was regretting the fact that they dumped it. So again, I don't know when the top's going to be. I don't know when the bottom is going to be. Personally, I think the markets are going to take a haircut of about 50 to 60%. But that has nothing to do with what I'm trading right now. Now, I like to create the family office environment, okay? And you know, if you know what a family office is, it's usually for the very wealthy, okay? And we don't get those kind of deals, okay? But I try to make those kind of deals available to my members. And what I'm trying to do is just give you the best of it and give you the best of the knowledge, not only mine, but those who participate. If you ever go to my chat room, you'll see that there's no negative, no matter how we're doing, nobody's ever negative because they all understand what I'm trying to teach you now, okay? That if you get too emotional about this business, you're gonna lose money and you're never gonna make it because you're gonna be too miserable to make it through. The key to trading success is emotional discipline. If intelligence were the key, there'd be a lot more people making money. Now think about that, okay? How many very smart people do you know that have never made a dime in the market? Okay, and why is that? Why don't they make a dime? Because they outsmart themselves, they think too much, and they worry too much about, let's say, fundamental analysis, which has nothing to do with what the trend of the market is. Okay, so again, if intelligence were the key, there'd be a lot more people making money. Now, when you're trend trading, okay, price is everything. Okay, price is the whole key. There is, if you put, again, I'm going to say it again, if you trade the news, you lose. You have no chance. And if you want to trade the news, I'll give you a discount. Come and trade with me. Okay, I'll give you 10% off. Okay, I'll give you a rebate. You buy a future when it breaks out of range, you sell it when the trend changes. Okay, now we're always in the market, either long or short. We do not get flat. We are either long or short. If the trend is up, we're long. If the trend is down, we're short. Now, obviously, we have a lot of positions that are mixed. Some of the trends are higher, some are lower. You don't get out before the trend changes. Okay, again, those who try to time it, and the worst thing you can ever do is time it correctly once, okay, because you'll never realize how much opportunity cost it costs you later from your willingness to continue to try to time it again and again and again. You stick to the system. It works. Okay, that's all. It works, but of course, we all know that amateur traders want to be right. Professional traders want to make money. Which are you? Do you want to be an amateur and continue to guess and wallow around and not make money, or do you actually want to become a professional? That is your decision. Okay. The secret to successful trading, okay, is simply knowing what your win rate is, okay, and knowing how to trade around your win rate, okay. And what does that mean? Well, you know, if you're going to look at an equity curve or your equity curve, okay, and you come down to the bottom of your equity curve, which means you're having a little retracement, that may be an opportunity for you to press if you understand and know what your win percentage is. Our win percentage is 66%. Okay, now it doesn't mean we make 60% of all trades in all times, but over the laws of large numbers, just like flipping a coin, a flip of a coin is 50-50. Okay, if you're a dice player, it takes 5,244 rolls to complete a cycle of dice. Okay, if you're a card counter in blackjack, it doesn't guarantee you're going to be a winner. But again, if you're putting the probability to your side and you understand the win rate, then you can do a lot of money management tricks that will help you make a heck of a lot more money. Okay. But the keys to success are consistency, discipline, and patience. They cannot be bought. Just like time can't be bought. I can't make you be consistent. I can't make you be disciplined. And I can't make you be patient. Now, I give you a perfect example. We day trade every day, okay, with my members. But I told them on Friday that the last 2 weeks of the year is a scavenger hunt, and there's no reason to be trading actively. And we're not trading until after the first of the year. Okay. Very simple. I said, there's no point to it. And if you watch the markets the last 3 days, you can see that no matter where they went, I'm correct. There's nothing going on. Okay. So it's easier to be patient and me being at the poker room than it is being here sitting and looking at this machine. What you need is a manager. Rocky, baby. But again, dear Todd, thank you for making the changes to 72K. You are so successful, yet still take care of the little guy. You're always ahead of the game. I admire that. You're an inspiration to me, an example to follow. Thank you, Jane. Thank you. Now, we have 3 different models we're offering today, okay? And one is a $350,000 portfolio. One is $45,000, one is 10. Now, these, you know, we are not trading them for you, other than we can do that through letter direction. But these are your portfolios, okay? I am not managing your money. I'm giving you the trades that will help you manage your money. But what we're using and what we believe in is that you need to have approximately 3 times what the required margin is to be successful, because you have to be able to overcome the potential drawdown that comes in at any time. And again, drawdowns happen, as I told you back in the beginning. I don't know when they're going to come, but right now I would suspect, based on where we are on our equity curve, we're due to have a big run. But either way, it doesn't matter. I don't want you to buy or become a member because of that. I want you to understand what we're trying to do. So the 350 takes $128,000 worth of margin, so we require 350. The 45K retires 19,000 margin, so we want you at 45. And the 10K takes 3,300, so we want you at 10,000. It's very simple. Now these can be traded through on your own or through letter of direction. Now this is the results of 2022. The 10K is up 20%, the 45K is up 6.1%, and the 350 is up 10.4%. And that's pretty good considering the miserable conditions of the market. I mean, we've got whipsawed quite a bit back and forth, right? And it's a pain in the ass, to be quite frank. And, you know, but we've had years where we've had monster returns, but I don't want you to become a member because I'm going to promise you monster returns. This is straight. This is where they are as of today. This is where we stand for the year to date. Okay, 20%, 6%, and 10%. Now, 12 bullshit lies you tell yourself that you hold your restaurant hostage. Look, change your mindset and change your life. Okay, that's what you have to focus on. Okay, are you ready to go into the next level trading? Are you ready to go into the next level and take care of yourself? That's the question you have to ask yourself, not me. Okay, that's what you have to ask yourself. Are you ready to do what's best for yourself? Okay, and are you ready to be able to follow rules? Are you ready to be able to put yourself in a position, understanding that drawdowns are a part of the business, that every day is not going to be a winner, and every day certainly not Christmas. Okay, now I get questions all the time, and these are kind of been around for a while, but they're very prudent and we're very about what we're doing. And I have a margin account at IB. Could I trade this account, or would it be preferable to have a separate account for futures? Well, that's up to you. I don't really care. I like a separate account only for one reason, because I like people to at least see how they're doing based on what we're recommending, not using and confusing funds. But that's up to you. It makes no difference to me. If I open a separated account, 128K, how much should I fund it with? I have not traded futures before and have no idea how margin works. Well, again, if it was a 28K, which was one of the portfolios we used to offer, then you would fund it with 28,000. Whatever the name of the portfolio is, or the number is what you fund it with. Okay. I'm in Central Standard Zone, not really a morning person. So with your trailer, it's coming out at 3 to 4 a.m. I wouldn't be making trades until 8:30 and 9. Would this be okay? Well, of course it's okay. Listen, I send them early because I go to the health club at 1:30 every morning, and I want people to have the trades, and that's when I actually run the algorithms to make sure that we have the trades that we want. You know, if you don't put them on, like CTG, who is our partner in this and who does the auto trading for us with a lot of direction trading, they don't put them on until 6:30 Central, 7:30 Eastern. Okay, look, we're not looking for 1 hour or 2 hours worth of trade. These trades are meant, the longer they're on, and we've been in trades for months sometimes, the longer they're on, the more money we're making. It's that simple. Okay. If I decide to use CTG to automate trading, what is the cost? I forget what the exact cost is, but I will get you set up with them if you'd like to. Okay, but it's about half of any other letter of direction fund. It's somewhere around $8, $9 for a trade. Okay, and they do all the executions. You don't have to do anything but look at your statement. Okay, and they're great partners in this as well. If I start out on your monthly pay, can I switch to annual later? Yes, of course. Listen, with me, you can do whatever you want. As I said, I want happy people. I'm not interested in fighting. I am the customer service department. I am the educator. I answer the emails. I do it all. Okay, I'm a one-man band. Can you advise me when you think it's preferable time to initiate the position of the BA? No, I cannot advise you. I don't know. Okay. The best time is when you sign up, you get into trades. Okay, that's the best time. Okay, just get in, and if it turns out that the trade is wrong, you'll reverse. Okay, if it turns out it's right, you'll make money. That's all. Okay. Now, every weekend, every Saturday morning at about the same time, you'll get a weekly summary of how we did. You'll get a listing of all the portfolios with live results. Okay, through that Saturday, actually through the Friday before the Saturday. Okay, and how we did. Okay, it'll have an equity curve. It'll tell you the profit and loss, and the numbers will be exactly direct because they come from Capital Trading Group, who sends me the results every Friday afternoon. Okay, every morning you'll get an update. Okay, which will tell you what is, if there is a new trade, it'll say like here we rolled everything to short. Okay, yesterday. Now you can see it's not very good at the moment, but I'm not concerned. But that's just, I assumed it. In fact, I wrote yesterday morning and this morning, expect a rally. Okay, we're so oversold that I expect a rally, but that has nothing to do with my algorithms. Like I can't change or try to time those. But every day, if there's no trades, it'll say none. Okay. Plus, I will also text this to you as well. Okay. Now, I mentioned a couple of times through the presentation, Capital Trading Group, and Capital Trading Group is involved in this. They do all of our letter of direction trading. Now, if you're not familiar with what letter of direction trading is, you sign up with Capital Trading Group. You give them authority to only trade this model, okay, of what we're doing. That is the only permission that they have. Okay, they have no other control over your account. they can trade the new trade. They can set up the original portfolio and then trade the new trades that we have. Okay, that's all. There is nothing else that they can do. Okay, you can close it at any time. You can do whatever you want. Okay, you can see what trades you have on because you have a portal that you can go look at. But I love these guys. I've known Nell and Pat, who are the two owners, for over 30 years. They started in about 2006, and what I love about them most, you got a problem, they answer the phone. Okay, if you've ever been stuck in voicemail jail, you know exactly what I'm talking about. Okay, so if you'd like to become a member, okay, you get daily texts and email updates. You get a weekly portfolio update with profit and loss. You get training sessions live and recorded. Okay. You get letter of direction training available if you want. That's up to you. Okay, you don't have to. Listen, if you want to do it yourself, that's fine. I personally, myself, I've got 12 different accounts. Okay, all but one are auto traded by them, letter of direction. Okay. But today, if you become a member, I have a 6-session option course I did, okay, which I will give you as my gift. I've written 2 books on options, which I will also give you as my gift. You can ask, why am I talking about futures when I know so much about options? Well, I'm too lazy to write a book on futures now. I'm too old. I'm 65. I'm tired. I just want to teach, and I want to teach through webinars. I don't want to write. Okay. Also, today, okay, and going into 2023, if you become an annual member that it trades through Capital Trading Group, if we do not make money in the year 2023, your subscription fee will be rolled forward and you'll get the next year for free. Okay. And again, but I cannot do that. You have to trade that through letter of direction because I cannot prove that you have traded every trade if you're trading it on your own. Okay. So anybody who letter of direction trades, if we don't make money in 2023, you get to go to 2024 at no cost. Okay. And you know, it's something that we like to do. And plus today, I day trade every day. And I was showing these earlier when I was making sure I had the right screen. This is what I'm using every day. I use a 4-minute chart and a 1 minute. Okay. And it's a little bit complicated to explain in 5 minutes. So I'm not going to explain it, but I do it every morning, except right now I'm off until January 3rd. But if you join up today, you can trade with me free, live day trade for free for 30 days. Okay, as part of your membership. It's just another Christmas gift or a Hanukkah gift that I'm giving away today. I feel like giving the shop away, but you can come and trade with me every day. I mean, I trade my own money. And in fact, here's the screen that I use. And we actually, I mentioned earlier, okay, if I can pull it down, this thing's such a pain in the butt. But anyway, I can't get it down, and I'm not going to switch screens. But the bottom line is I have an account that has $6,000 in it that I started with 5. So we're going to be pressing our positions in that particular portfolio. Okay, that was just one that I wanted because I've got such a wide audience on that. So I started using micros there. I still trade much bigger in a different account. Okay, and if you want to become a member, okay, either you can come monthly for $99 or annual for $1,000. And of course, the annual comes with the guarantee. If you trade it through Capital Trading Group, you get your money, you roll your subscription forward if you do not make money. And of course, those results are based on exactly what Capital Trading Group sends me, which means if you trade the entire year and you do not show a profit, you get to roll your subscription forward. Okay. Either one is bubbatrading.com/futures. Okay, you can become a member and start as soon as tomorrow. But of course, the live day trading will not start until January 3rd. And if you want to wait till January 3rd, whenever you decide to start specifically, that is when I will start your subscription. Okay. If you wait, then I will start your subscription when you're ready. Okay. So if you want to wait till January 3rd, no problem. Again, whatever you want to do is okay by me. I am not interested in, again, unhappy members. I am not interested in people being, disgruntled about what's going on. I'm very much straight up, as you can maybe tell, okay, and what I have to say. And I do not want you to ever be unhappy or dissatisfied with what we do. I mean, it's as simple as that. And I think that's why I believe today could be your best day ever. Because if you become a member, You get a massive education. You get my Monday night strategy call, which I do every Monday night, okay, which comes along with that, talking about markets in general, talking about the entire scope, and you get just a ton of education that will help you in all of your trading, from the discipline side to the structure of the trades that you're trying to make to the goals you're trying to achieve. If you have any questions, please feel free to fire, or Sherry, if you have any questions for me, let me know. I don't see any, so I don't know, but I don't see, I'm kind of blind, so.
Well, we didn't turn it on for you. So I've put your link into the chat for everybody. And I'm looking. Okay, guys, I think that means that Bubba's ready to take some questions. If you have them, now's a good time to fire them off.
Fire them off, because again, I break the market down into, from other that use these crazy indicators, I use no indicators. Okay, you can see my live charts, right? I use the phases of the market: consolidation, breakout, and blow off. All right. So if I were looking at this is the crude oil market on a 1 minute basis is trading in dead consolidation. Nothing going on. Oops, I don't want that. How do I get rid of that stupid thing? There you go. Yeah, this is in dead consolidation. It's not going anywhere. Okay, so what am I gonna do? I'm gonna do nothing. I'm gonna watch. I'm gonna wait for it to commit one way or the other. Okay, if I look at here, and again, I didn't make this trade, so I don't want anybody to say, hey, why are you saying it? This was a potential opportunity, but I really have to go back to my 4 minutes, and certainly there is no opportunities because there's not enough volume to do anything right now. But this is what I'm using. Okay, and right now I don't see any trades that would even be possible. The only trade that might have been made was shorting the euro currency right about here. But again, I didn't make the trade, so I'm not going to talk about it. But that's what we're looking for. But I only use the phases. So if I look at this, here's consolidation. Okay, we broke up to the upside. Okay, actually blew off to the upside and then came straight down, which in actuality, again, another trade I did not make, but this was a potential shorting opportunity somewhere in here. Okay, and that wouldn't have been shorted until it appeared in the 1 minute that it was starting to go down. The 4 minute triggers, the 1 minute is the actual trading time frame. So again, if you have any questions, please fire it up. If not, if you have questions, please ask now. I got Sherry on my team. She's taking care of me as always. Okay?
Well, thank you.
But again, listen, I want you all to be happy and have a happy New Year, happy Hanukkah, Merry Christmas, whichever you are, enjoy it all. Okay, and Sherry, I thank you so much. I know I'm a little early, and I'm happy to stay and wait and take questions, but I spun it out pretty quickly, and it's always hard for me to time 45 minutes. I'm used to going forever.
There you go. Well, everybody out there should go ahead and type it in now. If you had any questions for Bubba, you need to put them in there now, because I bet he's probably got other things he could be doing. Because I know coming in here and giving us your presentation, it takes some time out of your day. You got to get ready.
I'm going to play poker.
Okay. Wow.
I'm on my way right after this. I'm on my way to Rivers Casino in Chicago. I happen to be in Chicago, which I hate, because I spent half the year in Las Vegas. But I'm on my way to. When I'm done here, I'm going to Rivers Casino to play poker. I got to make some Christmas shekels.
Okay. Wendy does have a question, and she's saying, is it only the first month that's $99?
No, it's $99 a month, or it's $1,000 a year.
Okay, cool. All right, and go ahead.
Your annual gives you the guarantee.
Okay, cool. Any take on NAR gas or NAT gas?
I think natural gas right now is going lower, and we're coming out of season for nat gas. However, my concern in the energy markets is the United States' energy policy is so horrible right now, and we're buying now Venezuelan gas or oil, which is the worst, heaviest crap that there is. I think crude is going a lot higher, and nat gas, because we're coming out of season, might be a little bit softer here. But certainly at some point I'd look to be a buyer, because as they continue to try to change who we are and what we have and use our own natural resources, I think that you could see much higher prices. But as of right now, we are short nat gas and have been short since about 650. Okay. But again, and a lot of that has to do with the seasonality now, because there is no unexpected events like a sudden strike of cold in January. We know it's cold in January, so they're plenty stocked up. It's not like it's September and we get a real cold snap. So that changes the dynamics if you understand how the natural gas markets work. They're a little thin and a little crazy. And if you're going to trade them or be involved in them, just be prepared to have a lot of capital because they're not that liquid. They move fast and they are very expensive to trade.
Cool. Could you go back to your offers page? We have
I
someone
can do
asking.
anything you want, Sherry.
I have someone asking. Dimitar is asking if there was he thought you mentioned 30 days for free.
I'm telling you that you can trust me that I will honor that. If you not 30 days for this for free, you can trade live with me for 30 days for free if you choose to do so.
Awesome.
Join the portfolio models. You can just trade free with me live, day trade for 30 days.
All right, I'm going to type that in for him too. You get to trade live with Bubba for free for 30 days when you sign up for the $99 or the annual, or is it just for the annual?
And they get the free options course, which is 6 hours of options, and they get 2 books.
Ooh. Okay, so we need to go to the link that I put on. It's micro minis,
It's
futures portfolio management.
It's bubbatrading.com/futures. That's all.
Okay, I had a different link. Let me see, bubbatrading.com/futures. Because I'm going to give them the right link. It's the same thing. It's the same thing. It goes to the same place. And that's all spelled out there, right?
Yep. It's right on my screen.
Oh, but yeah.
That's an order click.
But you guys are getting a substantial discount, by the way. It's usually $2.99 a month. And if you sign up now, this is locked in for you. Is that true?
That is correct. I will
Awesome.
I've never raised prices on any current member ever.
Okay, cool. All right. Well, any other questions? We'll let Bubba go a couple minutes early to go to his poker game. I'm imagining a nice glass of whiskey with a big fat cigar too.
No whiskey when I'm playing poker. You gotta focus. You gotta focus power. You gotta make some cash. Maybe afterwards.
Okay, cool. All right. Well, then I think that's all we have for right now. I don't see any other questions coming in. How do they get in touch with you if they do have questions?
You can
just
email
go to the
me
website.
direct at bubba@bubbatrading.com. I love your questions. And again, you don't have to be a member. You can answer me questions. I'll ask you your questions whether you're a member or not. It's all good.
There we go. And I really appreciate you coming and being with us. I'm going to be sending out our dates for next year, and I hope to have you back.
I'll be there. If I'm welcome back, I'll be there.
You are welcome back. Thank you so much.
Gary, thanks everybody. Have a Merry Christmas, Happy Hanukkah, and Happy New Year.
Bye-bye now. Same to you.
Bye.
And that was Bubba Horwitz of BubbaTrading.com. He really has a great offer there for you guys, so please go check it out. You'll be able to see this if you're watching this on replay. I believe that that's going to be an offer that you can take up, even a week later. So our next guest coming in will be our final speaker for the day. It's Rick Sadler of Hit and Run Candlesticks. He's going to be talking about his gap and trap strategy. Rick is the founder of Hit and Run Candlesticks, creator of the T-line, pinball strategy. Hello, Rick. We can see you. RBB strategy. You're still muted, though. Let me get this up. All of the things that he's created, T-line, pinball strategy, RBB strategy, 3/8 trap strategy, trendicator, and the gap and trap strategy, he focuses on trading within the trend he uses, and he's using pattern setups and candlesticks. So I will stop talking, and I will make you the presenter. And if I can get to the right place, where is it?
Is
there
my
it is.
sound working now?
Now I can hear you. Yes, sir.
Oh, okay.
And
I don't see how to. And hello, Sherry. How you doing? I don't see how to share my screen.
Because I didn't click the magic button yet.
Oh, Uh-oh,
and
there
I
we go. Look
just
at
did
that.
it.
Okay, show my screens. Which
Thanks
one?
so much for being with us. I'm excited for this. It's been a great day. It's been a great
Oh,
lineup, and I can't think of anybody better to take us out.
you are too kind. You are too kind. Way too kind. Hey,
I'm going to mute
hello, Sherry.
myself.
Hello, everybody.
Hello. Now, is
Thanks.
that the right screen? We've got a spider's screen up, right?
Yeah, a blue thing up there.
Yep.
Yep,
Yep.
that's it. Yeah,
Okay.
look, um, everybody, I'm probably not the best PowerPoint kind of person there is. I like to show my screens. I like to talk in live, look at charts live in real time, and talk about what I like to talk about. So I hope no one minds. I have absolutely zero PowerPoint for today. My welcome screen is this right here. Welcome everybody. Thank you so much. Um, Probably the number one thing that I would ask is to ask questions. I don't care if it's in the middle of what I'm showing you. I love questions.
All right. Hold
So,
on to that thought for just 1 second, because what I want to do is I want to give you organizers so you can see the questions coming
oh,
in.
okay,
So
okay.
but what it does is it interrupts your microphone for a second.
Mm-hmm.
So just hold on for 1 second. I'm going to click the magic button now. Here we go. And your microphone is gone, and now it's almost back. There it is. It's back. Okay, I'm going to mute myself and you take it away.
Okay, I guess, okay. Thank you very much. I guess I'll see a question if it pops up. Thanks, Sherry. I appreciate it. And this is so kind for you inviting me. And this is really fantastic what you do on an ongoing basis throughout the year. So
I have
thumbs
a
up
lot of
to
fun.
you.
So thank you.
Thumbs up to you. Appreciate it. Okay, so what I want to talk today about is a strategy that we use. It's kind of a new strategy, sort of. Um, but it comes off of a strategy that you guys have probably heard before from us, and that's the trap strategy. So I'm going to really quick talk about that just for a second. The 3/8 trap is a entry strategy, and what we're using are two moving averages. What we just call traps. If you hear me say the word trap, just the word trap, it's always the 3/8 trap, which is 3 exponential moving average, and the T line here, always that. If we use a different trap, then I will specify what those two moving averages are. So what we've done is we've taken the 3/8 trap, which has been insanely successful, and it's an entry mechanism is what it is. So we've taken that and we've added a gap to it as well, right over here. And the gap is within, let's see, do I have my tools up here? The gap is within, I would have to check the scan. It's either 20 or 25 days. So what it is we're looking for a gap, and then we're looking for a pullback in a 3/8 trap. I don't know why I always call that 3/8, but it's 3/8. For instance, right here, for all this right through here, there was a 3/8 trap. There's your gap, pull back to a trap. What we like are charts that rally and pull back. And when a chart gaps, what that means is that something changed from, say, today and compared to yesterday. So the overnight, there was something that happened overnight that caused money traders just to pile into this, and it just gapped up right at the open. That when you're looking at it bullishly, we also have this for the bearish side as well. We'll look at a couple of those. When that happens, that's a sign that the bulls are interested. That's what we want. We want that fire in the belly. We want that spark. We want that, pour some gasoline on it. And that's what this is. We pour gasoline on it. Now, I don't, you know, when big outfits buy something like this, they can't buy their allotment. I mean, if they come in and they want to buy 100 million shares, they don't buy 100 million shares. They'll break it down. And what happens, otherwise they would just be trading against themselves. They would push it up so high, they're just going to sit there forever. So here we go up, and what happens is there's some profit taking comes in, and this is what we like to see. Here we rallied up again, and here we pulled back into that 3-8 trap again. This is one I bought yesterday. Yes, I did. I bought this yesterday, right in here, there. And then I added to it this morning because it got ugly this morning. It's like, oh man, well, I said, wait a minute here, that's just noise. So I added to it. Now I've sold part of it, closed part of it, still holding part of it, up pretty good there with that. I'm checking right now. I thought I was 20 some percent. There, 15.5%. Sorry, I was looking at the wrong thing, and no way I'm up that much. Okay, so we're good. So anyway, this is still working out. Now that's a 3/8 trap. Now what I'm going to do is I'm going to remove that 3 up there because I don't ever follow it. It just boogers up the old charts. It just you don't need it. I really don't need it. I have it built in the scan. If you're a 2000 TC2000 user, and that's what this is, I also have it right here, daily trap. So if this ever shows up green like this, then I know it's in the trap. But really, you don't even need to know that. If you're close to the T line, which is the 8 exponential moving average, or golden. So we're all good there. Okay, so let's look at a couple charts here. Let's look at VRNS. So here's VRNS. See, this is what I mean. Gap, and now we get into this trap here. Now there's more strategies out there than you can shake a stick at, and I'm not here to say that this is the best strategy. It's not. It happens to be the best one for me. The 3/8 trap maybe. The gap is a bonus on there. This type of trading, all it is putting a chart in a trend, and then you want that chart to rally, and then you want it to pull back. You want it to rally, and you want it to pull back, rally, and pull back. And then what you're going to do, what I'm going to do, is I want to be a buyer in these areas, just like that. So up, buy, profit, buy, profit, buy, profit. Very simple, very simple. If you want to hold this long term, you can certainly do that, as long as that trend line remains a trend line. As long as price doesn't, let's see what color, here we go. You know, as long as price continues to do this, if it does this, then it's game over, unless you're super long term. I mean, if you want to hold it for weeks on end, you can certainly do that. But if it breaks that trend, that's a problem. Me, I'm a trader. Sometimes just a day, sometimes 10 days, 15 days, 20 days. So it's all about what price does. I want to swing. I want to profit. I want it to pull back. I want to buy it again. I want to profit, pull back by the end, yada, yada, yada. See how this is working out? And now all of a sudden we get this gap in here. Series of higher lows and higher highs makes that trend. So we pop up, and like I said, there's so many good ways to trade out there. There really are. Okay, I don't know of any bad way, any bad strategy. Usually it's the trader, and then traders blame the strategy. It's not the strategy. It really isn't. It's you. Sorry to say that, but it is. The best thing to do as a trader is to find what works for you. Don't try to make something work for you if you don't understand it, because you'll always fight it. On the other hand, if you understand, well, I probably should have done it here. If you understand a trend, And if you understand a rally, and if you understand a pullback, how tough is that? But you have to understand it. I mean, and some people don't. Some people look at, 101 other things. Some people don't even look. I know people that look at charts that don't even have candlesticks or bars on it of any sorts. That just makes me want to lose sleep at night. I can't do that. It doesn't work for me, but it might work for somebody else. So the key is to find something that works for you. Okay, so I'm looking at this chart right here. Now, I'll be honest, we're running into the holiday time. I'm getting out of everything. I want to wash my hands. I want to be done. I want to take some holiday time. I'm not getting excited about trading. However, if tomorrow was going to be a decent day in the market, which I don't particularly think it is, and I particularly don't want to be sitting in front of my computer too much tomorrow, this is probably a chart that I would buy. I mean, I'm looking at this and I'm thinking, wow, we've got a nice gap in there. You've got a nice 3/8 trap. You've got a nice flag. You've got a breakout. I see a target up here. Wow. I'm thinking, yeah, man, but I'm not, because I don't plan on being here too much tomorrow, and I'm definitely not going to be around Friday. So this is the type of chart we're looking for. This is beautiful here. Very nice. Exactly what we're looking for. Another one is MBD. MBD. It's a lot like that. What was it? That OKTK, and that's not it. MBD, MDB. Oh, there we go. See, here's another one. See that gap? The fire in the belly, the spark, something ignited it. And take a look at the volume down here. Something blew that thing up. Okay, I mean, and it's certainly tradable up here. That's a different strategy. I'm looking for what we call a PBO, a pullback opportunity. So now we've got this pullback, and we're looking at an opportunity in the 3/8 trap. This is another chart that if I was going to be here, I would consider that as a buy. Let's take a look at DocuSign, and I want to look at DocuSign. Let me get rid of all that. There we go. There we go. Let's look at DocuSign. This is the scan that I use. One of them to find the gaps and the traps, and you can see DocuSign is coming up on it right now, popping up here. So you can see where we've got that gap. And again, we're looking, I would have to check in the mechanics of the scan. It's either 20 or 25 days. So it's 20, it's day 1, day 2, day 3, day 4, day 5, all the way back. So what we're looking for is that gap, pop, and pull back into a trap within that segment of time. So you can see here okay. I get asked this a lot, like with the scanner. So DocuSign's coming up. Is that a buy? Well, hold on for a second. Everybody must have some sort of trading education. You've got to have some sort of charting education. If you just decide you're going to be a trader tomorrow, and you're just going to say, hey, I'm going to buy toll because it popped up on the scanner, you're going to lose money really super fast. You've got to come in here and you've got to recognize that we've constructed a bottom. You've got to recognize that. You've got to, recognize that we've got a high and we've broken out over that high and we're pulling back. This is resistance right here, and now it becomes support. So you've got to be able to recognize those sort of things. And that just comes with a little bit of education. I don't think what we teach is hard. Pretty straightforward, pretty simple. The problem is what's between our ears. We start thinking, oh crap, it's my own money, so I have to do something different. And that is so wrong, but it happens so many times. But anyway, so I look at DocuSign. This is another one that if I was going to be here and interested in trading the rest of the week, I would have to take a look at DocuSign to the long side. So I said I would take a look at some shorts. So let's do that. Let's try this one here. See, and I'm not, here's the, let me make this stay on the top. There we go. So this is my gap, bear trap. I just took this LESL here. And what we're looking for is the gap and the pull up to the 3/8 trap. So this, in this case, here's one right here, a gap that would have been a 3/8 trap. Here's another gap, and now we're in the 3/8 trap again right here. We can go look at XP here. Look at XP. So there's your gap. Yeah, there's your gap. Sometimes I can't tell visually necessarily where the scanner's picking up the gap. It's all built in there, and I might not know exactly where it's picking that gap up unless it's just insanely obvious. I think that's insanely obvious. So here's the gap, the downside. Here's your rally up. We're in that 3/8 trap. And what we're looking for here is simply just what happened right here. We're down, we rally up and fail, right? Let me change the color. So here we're down, we rally up, we're looking for that fail. We're looking for the trend to continue and until the trend no longer continues. It's real simple. We'll look at DRI here. There's your gap right here, and here's your failure. On this chart, this is, I'm gonna have to keep an eye on this one. This chart here, so what you might recognize as a chartist, you might recognize, okay, hey, we've got a double top up here. You've got a nasty pair of bearish candles, and then we have that drop to the downside. Now here's what happens a lot of times. We'll look at this candle and say, oh, thank God the bulls are coming back in here. Ooh, I'm gonna buy it and I'm gonna make $1 million. You know, if you couldn't swim, and somebody took you out in the ocean and threw you overboard and you went underwater, I guarantee you'll probably pop up and at least take one breath. I mean, it's human nature. You're gonna fight like you've never fought before. You are going to take that breath. Now, you may not get the second breath, but you're gonna get that first breath. That's all that is. It's just a breath. It's like, save me. And now we'll watch for the rollover here. So this is very nice. Gap, trap, looking for the move to the downside. Hope that made sense on that one. Let's see, any more in here? Let's take a look at this on PGNY. PGNY. The voice command's not working too good. I guess this may be what they're looking at, the gap here. We're in the gap. We move down, we rally up. There's your 3/8 trap. Right in here might have been a gap down as well. See how we gap down and move right up in the 3/8 trap. This would have triggered not only in here but also in here as well. Let's see. Are there any questions here? I want to make sure I get some questions before I get too carried away here. All right. Where's my scan? So let's take a look at some of these. And here's one. Look at XPEV. See how that gapped up, rallied up a little further, and now it's resting. And now we'll look for an entry in this area right here. Does that make sense? Do I send recordings? Oh, thank you. I was wondering where some of the questions were. I see that now. Sherry will send the recordings. She records all this and she will send them. Yeah. Let's take VRSN. We may have looked at that one. Nope. VRSN. Now, this is a good one. The scanner, I'm not here to pump the scanner. This is just a tool we use. And I mean, it's available to everybody. It's not like it's all mine and you can't have it. You can have it. And but that's a different conversation. But what it does is think of these two windows right here. What's happening is the market is pumping information in. It just pumps it in. Boom, 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 boom. And inside these scans, there are multiple scans that create what you want. For instance, do you want a trend? Do you want a bullish candle or a bearish candle today? That sort of stuff. Do you want it in a trap and not a trap? Do you want a bullish engulf? Do you want a bearish engulf? You know, all these kind of things. Do you want MACD rising or falling? Where do you want MACD? All that kind of stuff. And what it does is it comes through there, and then when it's all said and done, it spits out just what you've asked for. It does. The scanner cannot give you a chart that is gorgeous. Okay, so like this BRSN, this is not a gorgeous chart to me. It is not. I look at this and I see a lot of problems up here. I see lots of problems, a lot of resistance in here. So you've got to know what you're looking for in a chart. However, it's doing just what we've asked. We've asked for a gap and we've asked for 3/8 trap. It's doing what we've asked for. So just because it pops up doesn't mean everything is, you know, hunky-dory and working out, you know, perfectly. So it will give you what you asked for. But then, you know, the chart itself might not be the overall best chart. So let's look at GTLS. Here's our gap to the downside, and we're playing around. We're in that 3/8 trap now. So what we might be looking for, not what we might be looking for, I can tell you exactly what I'll look for, is a bearish candle and maybe getting close to breaking down through that 112.25 there. And then we would carry that to the downside. Okay. Let's look at some of these popping up over here. Here's AZEK. There's our gap. Here's our pullback to the 3/8 trap. Pretty simple. Toll Brothers. Whoops. Box. We'll do box. Look at box. I mean, this is what I would call a gorgeous chart now. To me, this is a gorgeous chart. I'm going to move this over a little bit. Move this up. There we go. So I look here, I see a beautiful flagpole and a beautiful flag pulling back in here. I do see the, I do see where we're running into a little top over here. Oh, but wait, we're not actually. We broke out, we're testing it, and we're showing bullishness over here. I'm going to actually write this chart down for a few folks. Box. Thanks for bearing with me there. So here's what would happen at Hit Run Candlesticks. Here's what we would do. Say I was to buy this. I would buy it. Well, we would talk about it in the trading room. I generally tell people, hey, I'm getting serious about buying this. So when I buy it, I will post in the room, bought, BOX, and if I'm buying a stock, I'll just write, you know, stock at 31.46. If it's an option, and I typically only do, well, not typically, I only do directional puts and calls. So what I might write on here is, I might go out January, February, March. So I'll write, I bought box, say January calls and 30 strike, something like that. And I will post that in the room in the app that we have. Now, if you're a member or trial member, what happens is once you become a member or trial member, you're given a link to download the app to your phone. So Say you're out Christmas shopping right now, and if we buy box, you will get an alert on your phone. You do not have to be in the trading room to get the alert. You don't even have to have your computer on to get the alert to your phone. So that's how we would operate right in there. I see that OK TA coming up. That was a good buy. So we posted the buy here, and I did already close half of it because, like I said, I'm kind of pushing myself closer to cash, end of the year, enjoying some of the holiday time and grandkids. So I posted, sold a portion of AKT for X percent. Now, if I was just buying this, then this would be, again, I would post it in the room or the app. You don't have to be in the room. You're going to get the alert. If you are in the room, you're going to get the alert too. Exactly how we bought it. That happens within seconds. Now, the other thing that I do is I put together a minute, usually under 2 minutes, usually a minute and a half for one trade, is what I call a trade logic video. Excuse me. This is really, really good for education. So after I buy it, the video probably comes within 5 to 7 minutes after it's bought, which, look, we don't day trade, so the world's not going to come to an end. You're not going to miss out on anything for that. The alert was already sent out. So what I do is I click my recorder on, then I record this on the logic behind the trade, render it, I get it sent to members. Again, that takes maybe 4 to 7 minutes, maybe closer to 5-6 minutes actually, before it gets to you, because it does take a minute to render it after recording it. So anyway, that would be a very typical way of how things might happen here. All right, let's go take a look at another one. I don't see anyone coming up on the bearish. Let's go look at this ZBH. So ZBH, this is actually a good trade to look at. This is an excellent trade to look at. So let's think about this. Let's don't worry so much about over here. Let's look at how the gap and trap could have worked for you. See that gap right there? There's the trap. So could you, I'm gonna not do that. I'm gonna, let's see, do it this way, I think. Could you have bought that right in there? It gaps up again. No one says you have to sell it. It's your business. You do what you do. But if you didn't sell it, here's the pullback. If you still own it, or if somebody else wants to buy it, here is your chance. It gapped up again. Here's your chance. And this is a 3/8 trap, and it would alert a 3/8 trap in here. There it gapped up again and a 3/8 trap. Now, honestly, most people that bought it through here, you probably would have been getting rid of this thing. This might not be the place to get it. Well, it pulls back, and now it's trying to make up for all this bad news up here for whatever it was. We're in that 3/8 trap again. Now, I'm not sold on this yet. I don't think this is a great chart for buying right now, but it is a great chart to show how it works. This is an excellent chart to see how it works. Hope that made sense to everybody here. Let's see. And again, if you have any questions, in fact, any charts you want to look at, just let me know and we'll take a look at them. Let's come down here and look at ALGN. See the gap? And we're in the 3/8 trap. Let's go look at the chart overall. Can we see it trending? I'm going to go to a look at a weekly chart. And I'm going to look at the weekly chart about right there, back to the daily. You know, this is certainly tradable here. I happen to think the best trade is going to be over 216 here, is where I think it would probably be the best. I just saw our box. Woo, what's going on here? Market's moving around when it does that. There's that ZBH here. There's Anthem. That's a new one. Or no, well, let me type that in. ATHM. There we go. Let's get rid of that. There we are. So see how we have the gap, and the gap is within that 20-day span. This would have been a 3/8 trap right through here. In fact, all through here is a 3/8 trap. 3/8 trap right now. Follow that up. Looks like a little resistance right here. Resistance is just a target, by the way. That's all resistance is. It's just a target. Support, it's just a target. Targets are resistance and support as well. Let's see here, YMM. Take a look at that one. There's your gap. There's your 3/8 trap. Probably not my favorite chart. Probably not that at all. How about VIPS? There's a gap, consolidation, 3/8 trap. That might be ready to take off. Alrighty, I'll just I want to talk about a few things here. I've got a couple things listed over here, and what this is questions that I'm asked often, very, very, very often, especially of new traders. Tools of the trade, tools that I use is LTA live trading alerts. This is these alert windows that we were looking at. The chart that we were looking at is I use TC2000, and my brokerage is Tradier, and I use TradeHawk platform to trade. We trade, with candlesticks, which is nothing more than price action. Price action is nothing more than candlesticks. We really love the whole idea of trapping price in a position and then trade out of that position, whether it's long or short. We love price patterns and we love the trend. These are probably some of the most top questions that's asked of me, and I always thought I would post them out here. One thing, if you're interested, if you go to the website, hitandruncandlesticks.com, and right here is HRC 30-day trial. Make sure you use, let me type this right in here. Can I do this? Sure I can. What is it? Trial 50. You use that promo code, and instead of $49, it's $24.50, I think, 50% of it. So promo code trial 50, all capital letters, and then trial 50, all one word there, trial 50. Yeah, like if you're interested in doing something like that. All right, if there are no questions, if no one has a chart to take a peek at, then we will, we can call it an early day. Man, this VR NS sure looks nice. In fact, while we're here, what I'm gonna do is go look at the options on that. VR NS.
Hey, Rick.
Yes, ma'am.
You do have one person, Money Bowl is asking for BZUN.
Oh, I'm sorry. I can't see that.
You know what you have to do? If you pop out the questions box,
Yeah.
It's got question, asker, received. I always hit received and make it show me the most recent comment first instead of the oldest comment first.
Okay, questions, show answered questions.
Yep, and see you've got X, question, asker, received. To the right of received, if you click that, it should change the way they show. So the most recent question is at the top. but that was BZUN.
BZUN.
UN. Yes.
There we go. Ooh, I love that chart. I love that chart. Number
Whoa.
one, yeah, I like that chart a lot. Volume, good volume on it. I love charts that are trending. I love charts that are trending. We rarely buy charts down here. We rarely pick a bottom. I like charts that are trending. That's what we use these red and green dots for, is for that trend. Let me show this chart right here. Look at that. This to me is probably one of the best charts I have. Nothing on it but the red and green dots, and you can see that trend. They're green. So that's what I love to see. So with that said, we're over the 50 period moving average. I think that's 2 thumbs up. Here we've had this rally to the upside, and now we're pulling back. We've got a morning star signal here. I love that chart. I love that chart. In fact, let's go take a look at that chart. Now, that would be a stock trade for me. Let's see here, BZUN. So BZUN. You guys see, this is why I like, I should do it right here though, BZUN. This is why I like real time rather than PowerPoints. I like this sort of thing. So I don't know. I don't know how many people are here are listening, but you know what? I'm going to buy this right here live. This is kind of cool. I like this a lot. We've got a morning star signal. We've rallied up. We pulled back. That's working. First target is going to have to be this top right up here. Second target would be this top right over here. Pretty simple stuff, really. Next target, maybe up here. Maybe, yeah, about 740. There we go. I just clicked the buy button, by the way. Whoops. Of course, I got to do it right. Doggone it. Oh, I know what I did wrong. Really, I've done this before. I need to put the price in. I'm going to buy it right at $5.46. That's a nice chart. Thank you for sharing that with me. I appreciate it. There we go.
We all get a cut, right?
Yeah. There we go. So I just put an order in. When it fills, it'll fill. It's going to have to come back a penny now. We'll see if it does. Otherwise, I'll force it in there. But super. I hope that was helpful. If you haven't, whoever asked that, if you have another one, be glad to.
You know what? A few minutes ago, Jim Fisher asked, do you wait to enter until the price moves above the 8 EMA? And that was back around 336. So I
Okay.
apologize, Jim, that I didn't see it.
Yeah.
But do you wait? I mean, do you need any context for that? Do you know exactly what he's asking you?
Yeah, I do know exactly what he's asking. So let's just use this chart right here. I could make an argument for buying it yesterday, and that would be below the 8, and that the 8 is that black line or that gray, dark gray line right there. That would I can make an argument with that. The 3/8 trap, I don't live and die by it. It's not my only tool that I have in the tool shed. I also use what we call the trendicator. The trendicator is the red and green dots. And when price gets down into there, I'll buy there many times below the T line, many times. In fact, I believe that OKTA was bought. Yeah, see, we bought that yesterday, and here it is below the T line. Popped up today, we thought we were the smartest people in the world, but then it immediately went down, which I added to it way down here. And now we're looking good. So the answer is, Jim, if your strategy is to only trade stocks that are above the 8, then stick with that strategy. It doesn't matter what somebody else does. Here, I'm going to share something with you. I'm going to move this out. I get too much on the window here. There we go. I'm going to share this with you. This is all you need for long trades. I'm working on one for the short, but this is all you need. This is it. And let's just take it from the top. And there's your 3/8 trap. So if your rule is to only buy in that 3/8 trap, and I'm going to put the 3 back up here, then stick with that rule. Don't change it, and don't let anybody else change it for you. Stick with it. I'll guarantee you there are more than enough charts out there. You won't miss any. Now, I think I'll go look at this one real quick. What I'm using here is not a 3/8 trap. What I'm using is below the highest high in the past 5 days. The truth of it is, the 3/8 trap and this alert that goes in here, they're so close, it's not even funny. Now, what we can do is watch up here at the top of my screen. Now, see this, even though I don't have this dialed in for a 3/8 trap, so above the 8, I've got this dialed in below the highest high in the past 5 days. I've got other tools, and you saw them right here. I've got other things in there that put together the scan. Now let's just, Twinks. This is a sweet chart, folks. Check this out. I love that chart. We were looking at it earlier today. So see how this is not a 3/8 trap? It has broken out, but it's below the highest high in 5 days. We're splitting hairs here for an entry. An entry is not where you make money. An entry, oh, by the way, that chart just filled. I just heard it go off. Bison. So I'm now long some Bison stock. So what we're going to do is where can this chart go? And I'm a short-term swing trader. So first of all, hey, it could go up here to 30 bucks. I know this. I'm probably going to run out of birthdays before it gets up there. So I'm a trader. So I'm going to look for those swings. So let's just bring this right back down to something a little more normal. And that's what I see as targets on this. So it's not about your entry doesn't make you money. What makes you money is what the chart does after you buy it. Now, we're all adults here. We don't want to pay for it way up here. We know that. So to your question, does it have to be above the T line? No, it doesn't. Does it have to be below the 3 EMA or in the trap? Not necessarily. I could be all over this one. I love this chart. We were looking at this earlier in the room. Beautiful chart. Target 1125, 1060 up here. Possible targets. I'm gonna flag that one too. Thanks. Let's take a look at Ryan. And I'm not cherry picking these. These are not on a PowerPoint. They are not, I don't have them written down special to show you. They're popping up right here. And this is all you need for long. That's it. You don't need another scan, as far as I'm concerned. So here's a chart that's meeting all the qualifications here. This is a 3/8. It is broken out of a 3/8 trap. Check this out though. Let's go to a weekly chart. It is a weekly trap. That's good information, folks. Think about that weekly sometimes. And how I knew that, see that right up here? It tells me WTRP, that's a weekly trap, is what that is. So it's something on TC2000. If you guys have it, come into the room and I'll show you how to set that up. Real easy to do. Let's take a look at ROIV. There's a nice 3/8 trap. Here's a nice trend. So what the few things that's in this is I want a trend. This is so important with trading. I know that a lot of people get into picking the bottom, buying down here. I know people get into that. I've been trading for over 30 years now. I've traveled all over the states, helping and training people, webinars like this. I've talked to a lot of experts. We've sat around tables at trade shows. We've eaten some burgers, fries, and drank beers and just talked trading. And I'll tell you what, to this day, I do not know and have never met a successful trader that had a steady diet of picking a bottom. Not ever. In all this time do I, and I'm trust me, I know a lot of traders, but nobody makes money on just making a steady diet of that. You sit and talk to every trader, and I mean have a conversation with them, not a 5-minute snippet, but have a conversation with traders. Ace traders, traders in the middle, traders that don't make money. And you know what they all will tell you, but the majority do not do what they tell you, is they don't follow the trend. They don't pay attention to the trend. They will talk it, they will talk about it, but they don't pay attention to it because everybody gets hot and bothered with a hammer, or everybody gets hot and bothered about, the excited stock that's on CNBC maybe, or Bloomberg or something like that, or somebody of stature is talking about it. Well, just time out. You got me all riled up now. Just stop right there. Everybody that can hear my voice here is as good a trader or a better trader than anyone you've ever seen on television. I'm telling you that right now. Don't ever let those folks trick you to thinking they are a better trader than you. That is not true. That is not true. What happens with retail traders, you sit at home, you get kind of bottled up in your closet office, and you start focusing on trades. You get desperate, you start listening to news everywhere, and then you get hot and bothered over picking bottoms because somebody is saying that, hey, that's going to take right off. Let it take off. Let it. Go after the trend. Trend is where the money is. So this right here, this is set up to just look for trends and charts pulling back to the 3/8. I could do this all day long. There's only so many that stay on the window. I can't make them come back. But like I say, I could pull this up all day long, and there are trades there for you. Just stay with that trend. If somebody's out there, if you hear my voice, if you are a struggling trader, I'll not going to lie to you. This one setup is, I think, one of the best setups in the world for you. It's extremely, here, let me show you something here. I'm probability checklist for long, probably. So I'm running last here. Do you guys know why I'm last? I'll tell you so you don't have to answer. I'm last because I always go over. Let's see here. I'm going to make this stay on top. There you go.
That is a fact.
Yeah. That's what Donna told me. She said, you're last. And I said, why? She said, because you always go over.
He said
Okay.
You asked to be last.
Yeah. Okay, so here, if anyone here can copy this, please do copy it, okay? This is a checklist I use and I share with traders. And if you're a struggling trader, this setup right here could be the best thing you ever found, okay? If you're a trader that just wants, if you're a good trader and you want to a little something a little easier, a little simpler maybe, this is good for you and it works, okay? And I have a checklist for trades. So I'm going to go look at the market real quick because it involves the market. Excuse me. All right, my market is the SPY, by the way. Now, darn it, how am I going to get that back up there? Just a second. Bring notes on top. Now make this stay. Pin it to the top. There we go. Good. All right. So let's run through the checklist, okay? And let's use this stock. Well, let's use Meta because I'm in Meta, okay? And I can talk about it. Okay, so I'm in Meta. So is this a 3/8 trap? We're going to say yes, okay? You can see it's over that line, but we're talking frog hairs, all right? So give it to me. We're gonna check it. And besides, it says it's a 3/8 trap right there. So let's do this. Let's make this red. So check. Is the trend indicator green? You can see right there it's green. Check. Is there a second at moving average? The 50 is right in here, and the 50 is there, and the 34 34 is buried in there. It might be curling up. So I'm going to say we're good. There's a second one, we're good. Do we see a low, a high, a low, and a higher high? Let's see, a low, a high, a higher low. We're working on the higher high, and I'll explain this trade here in a moment to everybody, why I took it. Check. Now, this right here, this is not the one I meant to pull up. The one I meant to pull up, there I have several bullish chart patterns. Remember, this is for a bullish setup. I think on I must have it somewhere else. But I have several, like a bullish W pattern, a inverted head and shoulders, maybe a cup and handle, a J-hook continuation pattern. If there's a pattern in there like that, then I'm going to put a check mark. Okay, now let's talk about a bullish W pattern though while we're here. Could we? Now I know we're not there yet. Okay, I know we're not there, but you know, for giggles and grins, let's just do it anyway, just so that you see how this works. Okay, is the market right? Uh-oh, we have a problem because the market is not right. Now remember, I went and looked at all this. Well, it's okay. Let's go look at SPY. So is the market right? The answer is no. Let's look at this chart. Is the market right? No. Would the market be right here? Yes. In other words, is the market in your favor? So if you're creating a checklist, now not everything on the checklist is going to work out. Not everything. Now, I know that. Sometimes it's hard to make everything work out. This is kind of important. If the market is not in your favor, then really you're a salmon swimming upstream, and you all know what happened to salmon, right? So the market is not right. So right over here, let's go back to that chart. What was it? Meta. Whoops. Back over here. And let's do this. Boom, 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 boom. Is the market right? No. You know what? That might be a killer for you. Don't trade the chart if the market's not right. I don't care if I buy it. I don't care if Joe buys it. I don't care who buys it. If the market's not right for you, if it doesn't make your checklist, then don't trade it. This is important. Please copy this down. There's a tool on TC 2000 called T2123. I use this an awful lot. And is it just like the market? Is T2123 right? No, it's not. Man, I've got two things going against me here. Is there a candle pattern? Yeah. Is there support? Yeah. I've checked for resistance. Yes. Is there a path to profits? Yes, there is. Are targets set? They are for me. Yeah. Are we in the buy zone? Yeah. Is a stop in place? Yeah. So I've got a whole lot of yeses, buy it. But now stop. Do you really want to buy this chart if the market's not in your favor? Because right now, if you're buying long, you've got an 800-pound gorilla sitting on your chest. That's just a fact. T2123, some of you know what this is. Some of you have no idea what this is. I don't have time to go into it right now. Trust me, if this is wrong, you don't want to be in a long trade. If you're a struggling trader, abide by those two rules right there. Abide by those like your life depends on it. If you're a seasoned trader and you make money, then you don't necessarily have to abide by it. You've been through the ring, you know it. But if you're a struggling trader, abide by those two rules right there. Okay, I still have a minute maybe. So why did I buy Meta? Well, we've been following Meta. I'm going to move this over here. And just so you know right now, Meta, move this out of the way. Jeez, Rick. I'm currently up 16.8% at the close today. So we've been following Meta, and I've been watching this chart, and we've got this big push to the downside, and then the bulls stepped in. So we have a shelf right here, and then we have a shelf right here. And we've talked about this several times in the room. And the other day, I guess it was Monday. No, today's Wednesday. Maybe it was Monday. So this is Wednesday, Tuesday, Monday. It was Monday. And we talked about it Tuesday morning. That's right. So this is a top. We basically above 123.50, bullish Meta. Below 112.90, bearish Meta. In the middle, well, do whatever you think is right. And this is exactly what I said in our pre-market meeting that we have with members every morning. I said, okay, we talked about Meta, we talked about that, and I said, if Meta pulls back to this lower line and shows me a little bullishness, I'm going to buy that. And I did. Because what's the worst thing that's going to happen to me? If I bought it, say at I forget the exact stock price I bought it at, say 14.30, and if it went down, I was going to close it, and I do mean jump out of that thing in a heartbeat. I'm talking just a couple percent. The risk was small. I was willing to take the risk. So we closed up yesterday, closed up very well, stayed in it today, still looking good. If it makes it up here, the odds of me keeping it are 0 to none, because I want to get out of the business for a few days. Now, if I wasn't interested in getting out of the business in for a few days through the holiday time, I might keep this if it starts to move up. The thing of it is, as a trader, you never have to think like that, not ever, because what will happen is if it breaks out, that's an if, I can't guarantee it's going to break out. If it breaks out, what I will guarantee is it will pull back. That I will guarantee. Now, is it going to go to whatever price there that is and pull back to here? I don't know. Can it go up higher and pull back? Yeah, it can. Can it go up higher and pull back? Yes. I'm just guarantee it's going to pull back, not where it's going to pull back. But logic tells me, common sense logic tells me, right there, 130.60, looks like we're looking at a little support and resistance right through there. So logic tells me, common sense tells me, if it breaks out, we go here, we rest for a little bit, and that might offer that entry. The next move up would be to right here. And I'm just looking at price action. So if Meta is going to go higher, can Meta go back up here to 380? Of course it can. Do we think it is? That, you know, I'm going to need a couple birthdays before that happens. A couple. So how about let's just take it where a little more common sense might be. Touches, close. There's a good target. This seems a little more likely as well to the next target. I think we better put one more in there, I see. We better put one right here. There you go. The point is, you don't have to rush into a trade. You don't have to be a buyer here just because somebody else was. You can patiently wait. I've waited for this and waited and waited and waited and waited. And then finally, when we pushed down, we were back at support. And that's when I told everybody, I'm going to buy that if it gets bullish. And as long as I'm not chasing it. And I was in it right. And now we're working out. So follow this checklist. Please copy this. If you haven't, it'll be on the recording. But very, very helpful. I think you'll find it very, very helpful. This scan right here, this is all you need to know for longs. It really is. It's the only strategy you need, I think. Remember, if you're going to take that trial, just go to the website, click on a 30-day trial. Make sure you use that TRIAL 50, all capital letters, and that'll cut the $49 price in half, okay? Hey, Sherry, I want to say thank you so very much for having me. Thanks for letting me run over, by the way.
I really appreciate you coming. I know that everyone that's here has probably learned a lot today from everybody, but especially
Yes.
with what you've got there. And now, did you had a do they have to put a code in?
Just the trial 50, the promo code TRIAL.
Okay,
Yeah.
guys, don't forget that.
So it's like this
Go and
right
check
here.
it out.
You know, if you click on that link, it'll take you to this. Start your trial
Yep.
today, and then right in here, just enter you've got a promo code.
There you go.
Enter the code. Trial 50,
And it's got
just
to be
like that.
caps, right?
Yes, all caps. Apply, and it cuts it right in half.
Guys, you cannot.
Yeah.
I mean, who has someone that hasn't gotten them a Christmas gift yet? You need to send them this link.
I like that. Yeah. I like
Thank
that.
you.
Yeah, and also, I mean, I'll be glad to share all this with all members in there. You know, I share all this stuff. Nothing is secret. Yeah, nothing is secret. So it's all good. Anyway,
Fantastic.
thank you.
Thank you.
Hey, I appreciate it. Thanks a lot.
And that's a wrap. So everybody, we're going to be having more Traders Exclusive webinars in 2023. Thank you so much, Rick. And I do hope that when you get the list of dates, you'll pick a few and come back again.
Oh, I will. I promise. I love coming here.
I love it.
Yeah.
Thank you so much.
Are you getting stuck with the weather right now?
It's coming in. I'm actually in Ontario right now, in northern Ontario. And
Nice.
I actually think that Kentucky and all that in the middle of the United States is going to get hit worse than us.
Yeah. Weren't you in the Midwest?
I'm all over the place. I'm originally from Sarasota, Florida, but
okay.
my husband and I decided to do the snowbird thing in December of 2019.
Uh-huh.
So as you can tell, my timing is not great.
Yeah, we need
because
to get you a
COVID
calendar
really
for
messed
Christmas.
that all up.
Yeah, we need to get you a calendar for Christmas. Hey, you take care. Thank you, everybody.
Thank you
We'll
so
see you.
much, and have a great holiday season.
All righty, you too. Bye-bye.
Okay, bye-bye. All right, you guys, this has been the best day, and I hope that you will take advantage and check out these offers. I'm going to take back the screen if I can make myself see what I'm supposed to be seeing. There it is. You know, I've done this for a while, and it just sometimes it just doesn't show up where you think it ought to. So anyway, that was Rick Sadler of Hit and Run Candlesticks. Always a pleasure. You guys, $24.50 to get in on that deal. I just don't know. I think all the offers today were awesome. You're going to get email from all your presenters. You're going to get email from us at Traders Exclusive. And GoToWebinar is supposed to send you the replay link, but I probably will follow that up and make sure that you get it, because I'll have it uploaded probably tonight or in the morning, so that people who didn't get to see it or weren't here for the whole thing can go and look at it then. So I just wanted to say this is a presentation of Traders Exclusive. You can follow us on Twitter at options_info. And tradersexclusive.com, of course, which is where we're going to post the replay. And there's a daily email that comes out with video tips and strategies, trade ideas, education. I also wanted to let you know that we really appreciate you being here. And if you have a speaker that you would like us to invite to come onto one of our events, please feel free to send me their name to support@tradersexclusive.com. And from me, your host, Sherry, and all of us at Traders Exclusive, we hope you have a safe and profitable holiday season. Trade well, and we hope you will join us in 2023. Thank you. Goodbye, everybody.